Good morning, good afternoon, good evening, everyone, and welcome to the third annual Funding Focus Conference. It's wonderful to have you here. It's wonderful to see you. We've even had t-shirts made. Third annual Funding Focus Conference 2021. Together with the team, we've got the t-shirts, and we are looking forward to taking you through a packed program today. I just want to set out a few things as an opening address. The first thing I'd like to do is actually reflect on the journey over the past 2 years. For those of you who've been with us the whole time, our first event was on the 25th of November, 2019, back in the days when we could meet in person, and that was held at the London Stock Exchange. So it was a live in-person event. We filled the theater there. We had over 100 people. And it was a fantastic first event. And that was the event where I realized two key things. Number one, I realized that this isn't just a UK issue. This is a global issue, and I'm delighted that we've attracted a global audience. We had comments in our social media posts back then from 10 different countries around the world. And I'll talk a little bit more about our audience in a moment, but it opened my eyes to the fact that this is a big global issue. The second thing, oops, my background's gone funny. There we are. Sorry. The second thing that I want to reflect on is this is our third conference. So we ran our second annual conference a year ago on the 25th of November, 2020. And that was obviously held online. And as a result of the feedback that we had from people, we made some changes in 2021. So we've run a series of 3 quarterly events in March, June, and September before running this big annual event, which, as I said, is our third annual Congress. So we've run 3 annual events. We've run 3 quarterly events. And in addition to that, we've had 2 cohorts coming through our short course, which we call Funding Focus Explore, which is an introduction to funding and fundraising and finance. And I'll be talking more about the next cohort of the Explore program when I do my closing remarks at the end of the day. One of the other really important things and things that really drives us is our commitment to support the United Nations Sustainable Development Goals. And we support goals 4 and 5. And for those of you who are aware of a thing called a Together band, which is a thing that's linked to the Sustainable Development Goals, I'm wearing my 2 Together bands here. This one is Sustainable Development Goal number 5, which is gender equality. This one is Sustainable Development Goal number 4, which is quality education. And what we do at all of our events and at all of our programs, we make donations to charities that support these activities, that support SDGs 4 and 5. And we are making those, we will be making donations again today. So we're going to be making a donation of $1 for every person who attends today. And so far, through our various events, we have given 100 days of vocational training to women from disadvantaged backgrounds in the Philippines to learn skills in the culinary trade. We've given 85 days of finance and business skills training to women in Zimbabwe to enable them to start businesses to support their families. And we've given 11 days of youth development programs in South Africa. So we're still working through what exactly we'll be supporting today, but we will be continuing our commitment to support charities that are aligned to UN Sustainable Development Goals 4 and 5. So our audience, that's you. And first of all, I want to just say a great big thank you. It's wonderful to see you here again. For those of you who are here the first time, welcome. It's great to have you. For those who've been to all of our events, fantastic. Love your support and thank you very much. Over the last 2 years, we have, with very limited spend on marketing, we have attracted a global audience of over 1,000 entrepreneurs in more than 30 countries on 6 continents. So the only continent we haven't got is Antarctica. So if anyone is listening today who knows an entrepreneur in Antarctica, please put a comment in the chat that just says Antarctica, and we'll reach out and let's get an introduction so that we can say that we are representing all 7 continents on the world. So thank you again very much to that. The next thing I want to talk to as an opening remark, and T, if you could put up the cover on the slides. For those of you who are following my social media, I am in the final stages of writing my 2nd book, which is going to be called Funded Female Founders, Unlocking $4 Trillion of Economic Value Currently Being Left on the Table. It's currently standing at about 28,000 words, so it's nearly done. The book is set up in 3 parts, which links to the FFF, Funded Female Founders. So part 1 is an analysis of what's the current situation, what's it really like out there today. And I'm looking at latest statistics on what's going on in the world of fundraising and how the various statistics are showing up for female and underrepresented entrepreneurs. So that's the first chapter, the first part of the book. I also feature a number of stories of entrepreneurs who have successfully raised money. So yes, it's difficult, but let's have a look at some people who've actually done it successfully and what can we learn from them. I then look at the whole principle of cognitive bias, because one of the things I've discovered over the last 2 years is, whilst there is unquestionably bias against female and underrepresented entrepreneurs, and every statistic supports it, I believe sincerely that in the vast majority of cases, it's not a conscious bias, that it's an unconscious bias, and it's something significant that we need to be aware of and address. And I'll touch on that again in my next bit about some of the current research. The second part of the book is all about the fundraising process and what does it take to raise funding. Who are the different types of people you can look to speak to, whether it's angels or venture capital or private equity, debt funding, crowdfunding. We take you through the example of a business going through each of the different stages of fundraising. So that's part 2 of the book. And then part 3 of the book is what I'm still working on. And part 3 of the book is looking forward into the future. It's all about, what does a fairer world look like in fundraising terms? I could do fairer world in its greater full definition, but that's just too much. That would do my head in. So, but in the context of fundraising for female and underrepresented entrepreneurs, what does a fairer world look like? And I'm looking at things like what needs to happen politically, what needs to happen economically, what needs to happen socially. And as part of that work, I'm actually very interested in interviewing people who have an opinion on what a fairer future looks like. So if you are interested in participating in an interview with me, it would take not more than 30 minutes of your time. And we would go through those 3 issues: political, social, economic. What needs to change? What does a fairer world look like? If you would like to have an interview, please just type book interview into the chat, and Taryn will get in touch with you after today's event to set up a call, and then you'll be able to help me play. You'll be able to play a role and help me to close out the final section of my book. In return, I will give you a mention in the acknowledgements of the book, and I will send you a signed copy. So if you'd be interested in that, please just type book interview into the chat. Thank you very much. And the new book will be coming out in the spring of 2022. So I just want to touch briefly on some other research that I've come across in the last few months. And the first one is I met a woman who is an assistant professor at London Business School. Her name is Dana Kaunza, and she and I have had a number of calls. And she has done some incredible research. When she was doing her PhD at Columbia University, she took all of the video interviews from the New York TechCrunch Disrupt pitching competition over a 10-year period. So there were hundreds and hundreds of videos. So anyone who entered the TechCrunch Disrupt pitching competition, they were filmed as they pitched, and not only their pitch, but also their Q&A. And she downloaded all of this video content and did a huge piece of an analysis looking at the types of questions that the investors were asking to the entrepreneurs. And what she found was quite amazing. There is another piece of research that a professor from Columbia did where he talked about different types of language that he characterized as promotion language and prevention language. Now, promotion language is all about what's possible, what's positive, what are the opportunities. And for example, a promotion question might be, how are you going to grow your market share by 50% over the next year? Prevention questions, on the other hand, are all about protection and tend to have a more of a negative connotation. And so a prevention question around revenue might be, well, how are you going to protect your revenue base, and what are you going to do to stop competitors from stealing your customers? And what Dana discovered was that there was a very clear and significant bias in prevention questions and promotion questions based on the gender of the entrepreneur who was presenting. And no surprises, 67% of male entrepreneurs were getting promotion type questions, and 66% of female entrepreneurs were getting prevention type questions. What she also discovered that really surprised her was that female investors were also asking prevention type questions of female entrepreneurs and promotion type questions of male entrepreneurs. But the greatest piece of research that she found, or the greatest finding that came out of her research, was regardless of the type of question the entrepreneur was asked, if they answered in a promotional way, as opposed to a preventive way, they were 14 times more likely to get funding. So for those of you who are out there pitching, no matter what kind of question you get, answer it in a positive way. It's kind of like politicians, never bother to answer the question you're asked, just get the message across that you want to get. So that was a fascinating piece of research. Two other things that have come up in the last quarter. In fact, one of them just came up yesterday, and one of them came up last week. So in the United States, so far this year, more than $7 billion has gone into venture capital funds that are female founded and focused on investing in female entrepreneurs. It's still only 7.3% of the total, but it's gone a long way from where it used to be, and a long way from the historical trend where female founders were only getting 2% approximately of funding. So there's now $7.7 billion. This is in the USA, but $7 billion has gone into female founded venture firms. And yesterday, it was announced that the first all-female focused venture capital fund was launched in Germany. It's called the OXXO Female Catalyst Fund. That's AUXXO. You can Google that and have a look at that. But that literally was announced yesterday, and I have a call with the founding partner of that in December. The other report that I picked up on that came out in earlier this month was just shocking, and this was looking at the racial bias in the system. So it looked at VC funding to Black female founders between 2009 and 2019. And over that decade, only 10 Black female founders got funding from VC in the UK, which is just staggering. So I'll be delving into that more in my book, but I just wanted to highlight that as some of the research that's coming up. Now, my second to last point is just to quickly take you through our agenda. So we have 6 speakers today, and each of them will have a session where they'll speak to us for 12 to 15 minutes, and then we'll have 5 to 8 minutes of Q&A. That applies to 5 of them. We also have a special guest speaker in the middle. So my team members will be introducing each of our speakers as they come up, but I'll just let you know that the first 2 are both investors. One is a partner at Bethnal Green Ventures in London, and the other is a partner at a firm called TSVC in Silicon Valley. So we'll be getting an American perspective and a UK perspective from an investor's view on that. So really looking forward to that. We'll then be taking a 20-minute break. So one of the pieces of feedback we've consistently had is that everyone really enjoys the breakout sessions and the chance to network and meet new people. We're actually going to have 3 breakout sessions during the course of today. So the first one will be after the 2 investors have spoken. Then we'll come back and we have our special guest speaker. I won't say any more about that. And then we have we have our first founder before our special guest speaker. She's the founder of a business called Nosh Detox. Then we have the guest speaker. Then we'll be doing our second break. And then finally, we'll be welcoming back our last 2 speakers. And for those of you who were at our first event at the London Stock Exchange, I'm delighted to say that for the first time, we are welcoming back one of our speakers. So for those of you who were there, you may remember that in the panel of investors, we had an angel investor called Laura Harnett giving her perspective as an angel. Laura has since gone on and founded her own company. And so she's now going to be coming and talking to us about her perspective as a founder and entrepreneur. So really looking forward to that. We'll then have one final break, and then I'll do some closing addresses and tell you more about where we're going. So with that, we have, just before we kick off, we have 3 quick polls that we'd like to run. So T, can you launch poll number 1, please? T?
Poll number 1 has been launched. Can you not see it?
I can't see it, but as long as it's been launched, that's cool.
We have 67% of you who have responded so far. So to the other 33%, come on, get your vote in. We'll leave it open for another few seconds. I'm going to close the poll. 5, 4, 3, 2, 1. I'm ending the poll. And David, would you like me to share the results?
Yes, please. And if you can read them, because I can't see them.
Can you not see them? Curious.
Nope. Yeah.
So we have 4% of people who have been to all 3 of our events.
Yes.
26 have been to, this is their second one.
Okay.
70%, this is their first time.
Fantastic. Well, all of you, welcome. It's wonderful to see you. And we've got much, much more to come over the future. So thank you so much. Let's launch the second poll.
Second poll is launched. With which of these do you associate most? Are you a venture capitalist or private equity, an angel investor, entrepreneur, student, or other? And if you are other, please specify in the chat where you're joining us from today. So we'll give you another few seconds. 56% of you replied, 61, 64. Come on, guys. I'll give you another 5, 4, 3, 2, 1. I'm ending the poll and I'm sharing the results. So we have 3% of people here are VC or PE, 7% are angel investors, a whopping 72% are entrepreneurs, 3% students, and 17% others.
Brilliant. Fantastic. Thank you so much. And our last poll, T?
Last poll is launched. Where are you tuning in from today? And again, sadly, Zoom only allows us to have 10 different answers. So if you are coming from elsewhere or you want to be more specific about where you're coming from, do put it in the chat. Results are coming in. I'll give you another 5, 4, 3, 2, 1. I'm ending the poll, and we have 80% from the UK, 7% from the US, 3% from Canada, 3% from India, 7% from Europe. And that is all.
Very good. Thank you. So that concludes my opening remarks, and I will now hand over to Thibaut to introduce our first speaker.
Hello, everybody. Lovely to see all your beautiful faces today. And let me just share my screen. There we go. There's the speakers slide. So as we know, there are few females in the VC world, but of them, you'll find Dama. With a focus in early stage tech investments over the past 4 years, she has worked with Bethnal Green Ventures to help founders get funding. Outside of her paid work, she has volunteered at Help Age International and Empower Hack, and is a self-proclaimed fanatic of the metric system. So please, let's give a warm funding-focused welcome to Dama.
Thank you. I do have to say, I love the metric system, and that's a sort of ever-growing struggle living in the UK and trying to figure out what is actually feet and inches. But thanks so much for having me. My name is Dama Sathianathan. My actual name is Dama Sathianathan, but Dama is absolutely fine. That is not the entire alphabet. My pronouns are she, her, and for anyone who needs a visual description, I am a brown woman wearing red lipstick and a red sweatshirt, call it pullover, but a sweatshirt and a big bangly necklace as well. And I'm very pleased to sort of see that there's a large proportion of entrepreneurs here, because we love talking to entrepreneurs at Bethnal Green Ventures, where I'm a partner. I've been involved in the sort of investing in tech for good founders, where a large proportion of our founders are actually identifying as women as well, and we'll get to sort of female founder focus in a bit as well. But just to sort of give you a brief insight into what we invest in and how we actually work, Bethnal Green Ventures has been investing in what we call tech for good ventures and tech for good founders, so into really ambitious founders who use technology to really tackle pressing social environmental challenges using technology, but doing so at scale and doing so with sort of a profit in mind, in order to actually ensure that you're building a sustainable business that can retain itself and continue to have exponential impact on people's life and the planet. Where do we start talking about female investment? Really, you've seen and heard some of the statistics earlier as well, and I've also shared the research report that mentioned that only 10 Black female founders have received VC funding over the past 10 years. That's from really excellent research that Extend Ventures, Erica Brodnick, has done. Highly recommend following her on Twitter as well. But another sort of staggering statistic that people might know is the one that came out at the beginning of 2019, 2018 perhaps, I am not entirely sure, which was published by the BVCA, the British Business Bank, and Diversity VC, and which essentially said that less than 1p of every pound invested in the UK went to female founded businesses, which when the report came out was incredibly shocking, and has sort of moved our dial within the B2B ecosystem as well to actually report on how we actually make our investment decisions as well. So we're very proud to say that 34p of every pound invested in just 2020 went to female founded businesses, with a large proportion to mixed gender teams as well. And we are one of the sort of signatories to the Investing in Women Code, which is really a great sort of movement to actually bring more accountability into the space. So yeah, very happy to be here, and happy to answer any questions that people might have around the sort of the world of tech for good investing and how we can drive more diversity and outcome and provide better access to capital to underrepresented founders.
Brilliant. Thank you, Dama. So anyone who wants to ask a question, please put it into the chat and we can follow up on that and forward to Dama. I think what I'd be interested in, Dama, and it's something I know that you guys are doing at the moment with Bethnal Green Ventures, is you have a new intake coming up of your very early stage program. And I know that there are quite a few early stage businesses involved here. So could you just tell us a little bit about that, please?
Yeah, absolutely. So when we say early stage investing, we mean early. And early stage is a stupidly broad term, but which essentially ranges from the ideation of wanting to build a business to up to Series A now, which has had crazy valuations if you look at the market. But again, when we say early, we mean early. And we largely invest into companies who are pre-product and pre-revenue. So have enough sort of validation that whatever tech product or service you want to build will be adopted, but haven't necessarily built the product yet. And that's where BGV as an investor comes in quite handy, especially for first-time entrepreneurs. Because we do run a accelerator program and provide you with £30,000 in cash that you can use to pay yourself a salary, to cover your living expenses, to hire people into your team, so you don't have to do it all alone. But provide you with that capital and the resources through a 12-week program to actually help you build the sort of business model and the commercial model that actually embeds purpose at the core of its business, but also help you validate your impact methodology so you can have that exponential impact on people and the planet. I have to say it's quite a competitive sort of program. So we run the program twice a year and make roughly 10 to 12 investments per cohort. So largely every year we make 10 to 24 investments at that accelerator stage and provide follow-on investment of £50,000 to £100,000 as part of your pre-seed or series up to a Series A round as well. But again, it's becoming increasingly competitive. So we receive applications from 250 to 300 companies per cohort and can only make those 10 to 12 investments per cohort. So that's less than 5% of success rate. But yeah, I will drop links to our application process in the chat tomorrow, which actually opens tomorrow. We're opening up applications for our next program. Tomorrow. Which is
who would suggest that I planted that question for you, eh? And that's brilliant. Thank you, because Gabby Mendes has asked that. This sounds so interesting. Do you have a website or details? So if you could pop those in when you're done, and then people can pick that up. And just to recap, so you invest £30,000, and in return for that, you take is it a 7% stake?
Yeah, we take a 7% stake. Yeah.
So it's a fixed valuation on that basis of any early stage company coming in. You take 7%, they get 30 grand, and then you put them through your accelerator process.
Exactly.
What is involved in the accelerator?
So it's at the moment it's still a digital first sort of approach, just COVID and safety permitting, but also to enable more founders from who cannot necessarily go full-time on their ventures just yet because they have childcare responsibilities or just don't live in London, for example. So the program is still largely going to be run remotely online on Zoom and using different sort of tools and services. But you get quite a vast sort of network of amazing mentors that you can tap into. The BGV team is absolutely smashing. We are 10 women, 2 men, which is quite unusual in VC as well. And you have lifelong support that you get from BGB, because we urge people to also join our Q&A sessions. We run them virtually as well, one in person that's coming up on the 13th of December. But what we highly recommend to people, because there's always the emphasis on doing due diligence on founders, but there's equally an emphasis that founders have to do their due diligence on investors, because it matters who's on your cap table. So yeah, please do connect, get in touch with us. We have a very open, no warm introductions needed policy, so you can essentially just come to our website, sign up for a Q&A session, sign up to talk to our team about your idea, in a drop-in session, which is a bit more focused on your business specifically, and then see whether it's a fit and you want to apply.
Brilliant. Thank you very much. And it's interesting because I was having a conversation 2 weeks ago with the senior partner of a medium-sized VC firm. And for people who have been following the stats, I mean, there has been more money pouring into VC in the last couple of years than ever before. Not necessarily always going to female founders, but that's a different issue. I think in terms of expectation management, what you said is really good, where you said you're getting about 300 applicants for each cohort and you've got room for 10 or 12. This chap told me in the 12 months to the end of September, they received over 1,000 applications in their fund and they made 16 investments.
Yeah.
So that's a 1.66% success rate. So for those of you who are out there and you've sent in your pitch decks and you've sent in your things and you've connected with people and you've made all the calls and nothing's happening, it's not you, it's the system. And you know, again, with part of the stuff I'm going to be doing in the next stage of the book, I'm going to be looking at, okay, what can we do to change the system? But there is an absolute wall of money going into VC, but there is also an absolute wall of new entrepreneurs setting up companies. And so whilst we're seeing record levels of funding, there's record levels of people chasing after it. So it's still the same challenge. And I know there are people who are on this call because I've had conversations with them who have been seeking funding for more than a year and not been successful. Can you just, as a, and just let's see if we've got any more questions in the chat, but with that in mind, Dama, what would you say is the best way for an entrepreneur to have the best chance at getting accepted?
Yeah. So we try to make our investment approach and our sort of reasoning and how we make our investment decisions as open as possible. So a lot of content is geared towards giving founders the best chance to actually identify, how do you go about it, validating your business model? How do you go about validating your impact methodology? And where can you find resources to actually help you think about these in more detail? So what I would suggest in a sort of BGV's case is definitely check out our blogs, check out our different sort of involvement in different podcasts, for example, and put in the time to also get to know the investors and how they talk about what they're looking for. But more generally, I would also say that definitely sort of two aspects. One, find yourself a tribe, especially amongst this group as well, because we're all here to support female founders or people who identify as women who are building amazing businesses. So stay connected and provide each other the sort of peer support that you can get, because oftentimes we have seen female founded teams coming through our doors who have been rejected by BGV because it might be that we have invested into a similar business already, or we haven't seen enough traction to actually validate that this is a huge market opportunity that sees the sort of VC returns that our investment model adopts as well. But do not take no for an answer, essentially, and try again and ask for feedback where appropriate and where possible. And then just look into different databases that exist, like OpenVC, for example, which actually tells you a bit more around the sort of ticket sizes that VC funds invest in, as well as the sort of verticals and industries that people are interested in. And you can sort of retrospectively also work on the fund mechanics, because there are loads and loads of investors who are saying they're pre-seed, and they're actually not, because the minimum ticket size is $200K. But if you know what sort of the fund size is, their assets under management is in total, let's say investor A has a fund of 50 million and has said they're a pre-seed investor, but then you can sort of work out that they're largely going to make more seed investments that are larger than 500K, just because they need to sort of return their investment for the fund, certain expectations. So there's a really good slide deck that I'll put into the chat as well, where you can sort of try to determine how you can go about making those calculations. But my top tips.
So I've got two questions that's come up. Tracy has asked, do you think there's also an age bias?
Yeah, definitely. We have an amazing founder who just turned 60. Female founder building an absolute smashing business that connects sort of older people with younger people for intergenerational living, and also because accommodation in the UK sucks. And she's faced so much discrimination just by investors as well, who've basically told her, why don't you get a man who's really young to become the CEO of your business, and then you'll be able to raise money. So there's definitely still discrimination in the industry, but hopefully if you also look at the sort of signatories who've signed up to the Investing in Women Code, for example.
Yeah, and that's available on the UK government website for anyone who's interested. Just Google UK Investing in Women Code. And apologies, that question was from Joe, not Tracy. My bad. Sorry, Joe. The second question that we've got is from Thibaut. When looking at financial projections and models, what do you think is often missing, and how could models be improved?
So that's something that we teach in our program as well. So happy to share. I think it's really around sort of strong unit economics sometimes, and there are some really good resources actually that were created by Forward Partners. It's a resource app called The Path Forward, which provides you with a lot of templates on sort of financial modeling and operational modeling as well. So these are, if you are building a business and you identify certain gaps in the sort of provision, let's say around accounting or finance, don't fret, because there are so many people who face the same problems and who have thankfully also shared templates and enabled others to sort of find resources on how you can do that effectively. It's just a matter of being able to find them. So again, highly recommend The Path Forward by Forward Partners, amazing sort of resource hub for founders, and the Entrepreneur's Handbook, which is really, really good, and also signposting to different funding opportunities.
Brilliant. Thank you. And just a quick plug to say that if anyone's struggling with putting together models, my team, that's one of the services we offer in a sister company called Add Then Multiply. So if anybody is struggling with their model, please feel free to reach out and we can have a chat. Okay, terrific. Thank you so much, Dama. If I could ask you please to put your contact details, your LinkedIn, whatever, and anything else into the chat. And thank you. It's wonderful to have you as our opening guest. Sadly, the time has come to an end, but it's been great. And we've had lots of good questions there. So thanks very much. And I hope you can stay for a little bit and hear some of the other speakers.
Thank you. Thanks for having me. Our
next speaker is going to be introduced by Ruth Ribeiro from my team. So Ruth, over to you.
Welcome, funding-focused guests and speakers. Our next speaker is all the way from Silicon Valley, and his name is Spencer Greene. Spencer is a general partner at TSVC, which is a seed stage venture fund in Silicon Valley. He has spent 25 years working in the technology industry and 12 years in executive roles at Juniper Networks. For the last 15 years, Spencer has coached presenters on how to pitch products and companies. Would you please put your hands together for Spencer Greene? Thank you.
Thank you, Ruth, and nice to meet everybody. What I have today is a talk that I've done at a few business schools and entrepreneurship conferences called How to Pitch Your Early Stage Startup. And let me share my screen here. Oh, I think you need to enable me to share my screen if you don't mind. And I will give a little preview that this is a series of tips and tricks. We see at TSVC, we see about 500 to 600 pitches a year. And there's some things that I've discovered over the years of seeing them that may be obvious to everyone else, but these were learnings for me. So I thought I would share them as ways to help you make your presentation stronger and easier for a venture capitalist to digest. And I'll say that this comes from a very particular perspective. As Ruth mentioned, we're a seed stage investor. We're based in California, and there's a particular style that I think we're representative of. So some of the things that we say are going to be not valid for other style of investors, but I'll give you a perspective as we see it. So the summary is, 4 things, right? One is find the right type of investor who matches the style of business that you're running. Second, and most importantly, a clear, concrete, and compelling story. And I'll talk a little bit about that. But you would be surprised at how many companies we see, again, after 500 or 600 pitches in a year, how many that we as partners, after the meeting, we disagree with each other about what the business is. And obviously, some of that's on us. We're perhaps, just not as clever as we think we are, but also it's, you have to understand the perspective that the audience is in and leave them with something that they really understand. Third part, be ambitious, I'll talk about, and then describe a little bit about the deal. So one of the things that was surprising to me, I had done angel investing for a long time. I had been involved in startups for many years and founded several companies. I didn't entirely appreciate how narrowly focused most venture capital firms are. So I had introductions, or I had names, I had people I knew. I said, "Oh, you're a venture capitalist. Let me pitch you my company, one of my startups." And what I came to realize is that folks are very narrow in these 4 dimensions: stage, sector, geography, and special situations. So I'll send these slides out. But what we're seeing right now in deals that we do is, and these metrics have moved over time, but you have funds that, like us, focus on pre-seed and seed. And these are going to be valuations between 5 and 15 million US dollars, somewhere between 250K and 5 million round size. And you have investors that focus on the A round. And then of course, there's folks that are much later stage. And the structures vary depending on what stage you are. So finding an investor who's at the stage that you are, these are initial screening questions, right? So if you're approaching a number of different investors, then we have an intake process where we first screen out, okay, is it the right stage for us? Then we look at, does it match our specialization? In our case, we're sector agnostic. So we have a number of different areas that we work in. But there are definitely funds that specialize in fintech, specialize in digital health, and so forth. And then geography, there used to be what was called a 20-minute rule, right? That an investor only wanted to invest in companies that they could drive to within 20 minutes. And that has been, even before COVID, there were changes that happened starting about 10 years ago in a founder-friendly movement that was led by Andreessen Horowitz, more or less. But certainly in the pandemic, where so much business is transacted virtually, the 20-minute rule mostly doesn't apply. However, there are particular constraints and biases. For example, as a US investor, we prefer US corporate structures. So we have businesses, we have a company in Africa, but they have a US Delaware corporate structure. They're doing business in Nigeria, as it turns out. And we have other companies in other geographies with US structure. There's also a trend I'm seeing, which is the plan for B round inversion. So this is a company that maybe starts in another country and they want to raise capital in the US. So at the early stage, they will say, okay, we're currently incorporated in Germany. We're currently incorporated in Australia. We're currently incorporated in even Canada. And they will have a plan that says, once we raise our B round, sometimes A round, we have the intention to invert the company, have a US parent to access US capital markets, and then make our overseas operation, which is the principal operation of the company, into a subsidiary. Obviously, you don't have to raise capital in the US, but if you're looking to raise capital in the US, it's likely that folks will ask you for that. And even, for example, Y Combinator, which is doing a lot more international business, especially in Latin America, they require, I think, a US Delaware structure. And then one of the reasons why geography is still an important aspect of how venture capitalists constrain their portfolio is that we've seen a lot of businesses that have success in another geography, and they say, oh, well, here's our numbers, here's our success in our home country, and we intend to launch in the US. And over our 10-year history, we've seen most of those fail. So for us, we look for, if you have a target market that's your destination, we look for some early traction in that target market as opposed to just a plan. So the next piece of what I coach people on is telling a compelling story. And there's a number of interesting books. The one my favorite is called Made to Stick by Chip and Dan Heath. And they talk about a framework where you have a simple, unexpected, concrete, emotional, and can't remember the last one, but it's SUCCES, success, right? A thing that some people who are telling their company story forget is that this is a hero's journey. The hero is not your product. Folks get oftentimes too wrapped up in their product or service, and the hero is not you necessarily. The hero is your customer, right? So, and this whole thing about clarity, when my partners and I leave a meeting and we can't agree on what we think the product is, it's often because of an issue at this step in the presentation. Now, as a presenter, there's a phenomenon called the curse of knowledge, right? So your subject so well that you may skip steps in explaining it, right? But we're coming in and in a given week, seeing 15, 20 companies, it's easy for us to get confused. Sometimes, oh, was it this company or that company? So simplifying it as much as possible. And then most importantly, I think, making it concrete. So if you have a customer persona, if you have even give the person a name, right? And say, hey, what my product is great at, it's helping this person do this thing. And before they did this thing, right? Before Airbnb, you pretty much had a choice. You could stay in a hotel, or maybe you could go on Craigslist, but you didn't really feel comfortable or safe renting from somebody on Craigslist. Now with Airbnb, you have access to all the spare rooms in the world, right? So something that will tell me exactly what's the before and after. And as I mentioned, it really shocked me to see how often the basics of the business didn't come across. So I would also say simplify, simplify, simplify. We have particularly folks who have an engineering background when they present a company. They like to tell every possible aspect of the story and corner cases, what if this, what if that, and then the central theme gets lost. So it's okay in an early story to just hit the high points and then invite questions, for example. So this is one that I think is really important, that when we evaluate a company, and I think this is true of any investor, right? We look at the team, the technology, and the product, right? So we look at the market, right? We want to understand, is this an opportunity that's going to be sufficient? We look at the business model, all these things. However, particularly for us as early stage investors, it's really all about the entrepreneur. And I'll tell a story. You can see behind me some of the companies that we invested in at seed stage. So Zoom, when we invested in 2011, their business model was not what it turned out to be. However, the entrepreneur was someone that we as a firm believed in. And we said, this is a person who, as the world changes, as the opportunity changes, as more is learned, he can figure out what to do next. So the investment was in him. Now, in part, of course, we're interested in the nature of the business, but more importantly, we're looking at many of these aspects of the business as for how they reflect on you as an entrepreneur. So for example, if the market is a strong market, then what that says to us is, okay, this is an entrepreneur who has chosen a strong market, someone who has both the analytical skills to understand what a strong market is, and someone who has the ambition and the choice to pick that market, right? And if we say, you know, hey, you have a revenue plan that no one could possibly execute, then we're not really complaining about the revenue plan. We're complaining about the judgment of the person who's presenting a revenue plan like that. So ultimately, as much as we like to portray ourselves as hyper-rational, the full meritocracy, right? I mean, this is the myth of venture capital investing. And I know you've heard from the first speaker about some of the biases that are inherent in the industry. Ultimately, when it's all said and done, if you like the entrepreneur as an investor, then that means you like the deal. And it's not the other way around, right? We think that, oh, you know, if the market is very attractive, if the product looks very clever, but we've passed on deals where we were just blown away by the product because we couldn't get comfortable with the individual. And conversely, we've done deals where we said, you know, this product doesn't quite look right, but there was self-awareness. The entrepreneur understood that it wasn't right and said, you know, this is a starting point. I'm going to figure it out. And we said, yeah, we believe you could figure it out. So the third major point, and this is a tough line to walk sometimes for us, and I think for most venture capitalists who are in the same sort of sector that we're in, we only will do deals that have the potential to be 100x return, right? And there used to be guidelines about 10x return. 10x is not nearly enough to make the business work, because for us, for example, we tend to take very large risks against opportunities that are enormous. And so if we do a 50 company portfolio, we expect half of them to fail completely. Now, in order for that model to work, we have to have some that do very, very well. You know, the Zooms, the Cartas, the Ginkgo Bioworks, right? The challenge there is that if you're entering a very large market, then you risk coming across as impractical, right? So there is one strategy. It doesn't work with all businesses, but there's one strategy that has been very successful, which is to do things in steps, right? So if you say, hey, my intention is to build a million mid-market sedans. So that's my goal. And I would say, even when you're presenting, tell that part first, establish a vision, say, hey, this is where we're headed. Now, in order to do that, I first need to build a luxury sedan. And in order to do that, I first need to build a small two-seater, right? So now we have a picture of where you're going. We know it's ambitious. We know that the intention is to build a million of something, right? And you say, look, I know that I can't jump from the beginning to a million mid-market sedans, but I have a way to get there, right? And we've seen, so Carta was one of our investments. They started with a very modest product. It's a product that many startups use to manage their cap tables. Their ultimate destination, and the reason they've been so hot in the market lately, is that what they want to become is the stock exchange for private company shares, but they didn't begin there, right? And similarly with other businesses. So one approach you can take is to take things in steps. And then just a little bit on deal structures, what we're seeing now at the early stage, at the seed stage. In the US, this is obviously an overgeneralization, but most of our seed stage deals that we see are on a safe structure. So this is a simple agreement for future equity, and they tend to have a cap, no interest and no discount. Interestingly, in the US, on the East Coast, and more of the deals we see that are overseas, not in the US anyway, tend to be on a convertible note with interest and discount and a cap. And then obviously, later rounds and some earlier rounds are priced. My only suggestion there is, there's a quite simple standard structure. You have a price, you have a share. We see people trying to get clever with warrants and other kinds of crazy things. And I would say there's no need for that. These deals have been done 1,000 times, and innovate on other things, but not your deal structure. And then a trend that has changed over the last 10 years is it used to be quite common, I would say almost universal, when raising a round to just say, hey, I'm raising money. I think I need somewhere between 2 and 4 million, and then really let someone offer a term sheet to you. And that still happens, and particularly again in some geographies it's more common than others. What we've seen a lot more of is companies that are setting their own terms. Now, oftentimes these terms are not completely solid, but they're presented as solid. So a company will, even with nothing, right? They come in, they have basically just a PowerPoint and a team of 2 or 3 people, which is the stage at which we often invest, and they'll say, I'm raising 3 million on a safe with a 12 million valuation. Now, they don't state that as a negotiable term. They just state it as flat out. In many cases, if there's not already a lead who's signed on, it turns out to be negotiable. But the trend that we're seeing is folks that, and it does help us to simplify in some ways our screening. So we can say, yeah, this fits our profile, it doesn't fit our profile. It's also, in many cases, we also see folks who say, yeah, we don't know what the terms are yet, the lead will set them. Now I'm jumping around a bit, trying to keep it brief and then leave time for questions, but I have a lot more that I can say about all these topics, and actually each one of these slides could be a 20-minute presentation. So last thing I'll say in this session, in the prepared remarks, is when you get a first meeting with a venture capitalist, I think there's 3 things you're looking for. You want to learn about who they are and figure out if it's worth it for you to continue talking to them. And that's the same thing going on the other side, right? And then again, given that, so we do about 1 deal a month on average for us. And I think we're fairly representative. So we're doing 12 deals a year. We see maybe 500 pitches. So it is important on both sides to make a quick assessment whether this is something that's worth taking more time in. And out of those 500, there may be, let's say 50 or 75 that will take a second meeting to get down to 12. So on both sides, you want to do a fairly quick assessment. And if it's a firm that you think you'd like to work with, then the important thing is oftentimes there'll be several people in your meeting. Someone within the firm has to be your sponsor, right? So they're the person, they're not necessarily in a position of authority to do a deal. They can't write a check, but it's someone who says, you know what, I want to hear more from this company. I want to do the work to understand them better. And if you can catch someone's attention within that first meeting, then, and if you decide that they're worth talking to on an ongoing basis, then that leads to the second and third meeting where the focus is very different. So who are we? We are based in Los Altos, California. I'm actually calling from Palo Alto right now. And as I mentioned, stage, sector, geography. So we do seed and pre-seed. Our sector, we're not completely agnostic, where there are particular areas, deep tech, fintech, and digital health are the areas that we tend to like. And we like US domiciled companies. And we have done almost 200 deals since 2010. Some of the big ones you see here, 7 unicorns, which we think is a leading number for a seed stage fund. And we've had so far 28 female founders, and hope that will be many more Of our unicorns, by the way, Zoom was founded by Ritu, and Quanergy has a female founder whose name I unfortunately can't pronounce. It's a Chinese name. And Ginkgo Bioworks, a team of 5, which is a mixed gender team. And that is us.
Brilliant. Thank you so much, Spencer, for sharing that. And we're a little bit tight on time, but we've had one question come through from Amanda. When you're looking for 100x return, what's a realistic time frame that you're looking at?
10 years.
10 years. And so would you want to see financial modeling done out for a 10-year period?
Oh my goodness, that's a pet peeve. No, I mean, Apple can't predict their revenue for 1 quarter. How is it that a startup can predict for 5 years? No, we look for a large market opportunity. So if you say, you know what, there's at least 30 million people who need this, and they'll pay at least $20 each. Okay, that's enough. Modeling your revenue for me is just ridiculous.
Yep. Okay. Brilliant. Thank you so much. And Spencer,
sorry to run over.
No. That's fine. That's fine. It was brilliant to hear, and such valuable content. And I've already made a few notes of things that I'll repeat in my closing address. So thank you so much. Great to have the perspective of a Silicon Valley investor, which is our first time. So most of our investors so far have been from UK, Europe, and Asia Pac. So thank you very much. And in terms of if people want to reach out to you, is LinkedIn the best way, or what?
LinkedIn or email, and I will quickly put this up.
If you could
again.
just put those in.
And again, you'll get these slides, but this is me, Spencer at TSV Cap, or LinkedIn, Spencer Greene.
Fabulous. Wonderful. Well, thank you so much. And I hope you can stick around with us. I know it's the beginning of your day, but I hope you can stick around with us and, maybe stay for one of the breakout rooms and see what happens. And but Spencer, thank you so very much. Welcome back, everybody. I hope you had a good first session in the breakout rooms, and I would now like to hand over to Taryn, who is going to introduce our third speaker. Taryn, over to you.
Thank you, David. So our next speaker, here we go. Our next speaker is not only a mother, author, inspirational speaker, and an all-out force to be reckoned with, but also an expert on natural health and lifestyle solutions and women in leadership. Please welcome to the funding focus stage, CEO and founder of Nosh Detox, Geeta Sidhu-Robb.
Thank you. I quite like that. That's quite different to having a virtual class. Thank you very much for having me. I was in a breakout room where people are having the best time. So I haven't managed to catch any so far. So it sounded like it's been going really well, which is really great. So I think my job here today for the next 20 minutes is to talk to you about how to fail really spectacularly. I just want to occupy that space and hold it dear to me, and then we'll go from there. When I spoke with David and he wanted to talk about funding and women of color, it did make me laugh a little bit, because I was like, well, it turns out that I'm actually this massively high risk category for institutional investment, and it's a very particular category known as women of color. And you just aren't, it's not something that lends itself to be invested in. So I've had a very checkered history with investment, which has been somewhat interesting. So I thought I'll walk you through it, and I hope it's interesting. And if somebody wants me to talk about something else, I'm sure you can say that. But when I'm an ex-corporate lawyer, which sounds like I should know really intelligent stuff, and it doesn't mean anything at all. I really, really can tell you how to merge something and unmerge the damn thing. And that's pretty much it. It's really not very helpful. Oh, lots of paperwork I can get through in very short periods of time. So those are the skills, that and a very sick child, that I brought to health and wellness. And another really, really important part of being an entrepreneur, I brought deep poverty to it as well. So it's a great way of focusing the mind when you think, how the hell are we going to eat? And it kind of gets you really, really in the right frame of mind. I've never had a problem with focus and productivity, which is, just one of those things. I had 3 small children under the age of 6, and I couldn't go to work because my eldest child was incredibly ill. Every time I left home, he was anaphylactic. So he'd eat something and he'd swell up and he'd go into a coma. And I just learned not to leave home. I was like, I'll stay right here. And then I thought, oh, how do you make money when you're sitting at home? Because I was a lawyer. I'm an immigrant, right? Go be a doctor, lawyer, accountant, or get married or something, which really didn't work very well. So there I was with 3 kids under the age of 6. And I thought, I better learn how to make money. And I started thinking what it was that I could sell. And the thing that I knew how to do really, really well was I knew how to I was a corporate negotiator. So I used to go in, and when the pipeline in Belarus, the people building it didn't talk to each other, they would fly me in and go, get them to talk to each other. And I'd be like, oh, men and guns and beards, shit. It was slightly traumatic, but sadly I was really good at it. And I made a lot of money, but I wasn't building anything. This is by way of the introduction, I guess. And so what I did was I thought, I really want to build a business. And the thing I knew how to do was health, wellness. I'd helped my son get better. He was anaphylactic, he had eczema, asthma, and I'd sort of made him better. And that was the thing that I kind of knew how to do. And I thought, if my son had these problems, other people will have these problems too. So I was like, yay, business idea. But I couldn't work out how to fund it because I was poor. And so I found when we were moving into this room that you couldn't swing a cat in because it's where we were sleeping because we were poor. I found a piece of paper from HSBC which said, here is your £2,000 overdraft. So I was like, oh my God, somebody gave me an overdraft. And I had come from this very, very, my husband and I had built this massive business, and we had a house in Monaco. We were turning over millions of pounds. And when I left, I was like, oh, I'll just take my share. Didn't quite work like that. So I hadn't needed this overdraft. I walked into my local HSBC bank. And I said, can I talk to a business manager? Because there used to be people in banks in those days. And so there was this really nice man. And I said, so I've got this overdraft. Could I please have it? And he said, what do you want it for? And I said, I want to go and set up this business. And he said, oh, do you have a business plan? And I was like, what's that? And he said, it's this thing that says how your business is going to grow. I was like, oh, numbers. I'm like, I really don't do those. I kind of do words. I don't do numbers. And oh my God, it was so painful. So eventually this guy's like, look, write these numbers in this way, fill these numbers out and come back. And I'm like, I'm going to make them up. He said, that's completely fine. That's absolutely fine. Off you go. Just come back with bloody numbers, because otherwise I'm not giving you any money. And I think he was trying to get rid of me because I'd been there 2.5 hours at this stage, and I wasn't letting him leave the room until he'd given me some money. So I came back with a business plan because I Googled it. I filled the numbers in, I gave them to him, and he just looked at me and he said, don't let me down. I was like, no, you and the 3 children will have to eat today. We're good, we're gonna do this. And he gave me £2,000. And this was on December the 20th, I think. And I was like, right. So I started to spend the money to set up the business, and we had to open on December the 7th, because on December the 6th, I'd have spent the money. So we were like, okay, we have to start making money from December the 7th. So on December, I set up a food delivery business called Nosh Detox, and we were delivering dairy and gluten and egg-free food and juices. And we knew what we were going to do, and we knew people needed it, but I didn't know anything else about anything. And that was what we were going to do. I remember stopping a delivery driver who came to drop pizza off on the 4th going, do you have another job? He said, when? I said, in the morning. He said, no. And he became our delivery driver. The guy who worked next door became our chef. Honestly, this is absolutely the truth. I promise you, every word of this is the truth. And so we opened, we had £200 left when we opened on the 7th. And it was like, just sell everything, all the time now. And I was like, I must be able to do that, because I've done all these, Belarus weird things. So that's what we did. We sold and sold and sold and sold. And then about 2.5 years in, a friend of mine came to me and I said, listen, I need to learn about this thing called marketing, and I don't know what it is, but I know the only way I'm going to get bigger is if I market. And she goes, oh, well, where are you going to learn it? And I said, there's this guy. And he said, I'll teach you how to market. He was based in Los Angeles, which is a slight problem because I was in London. I said, it's going to cost me a lot of money to fly in and out, but he seems to be the best in the world, and I want to go learn from him. She goes, why don't I invest in your business? And I said, why would you do that? She said, let's start again. Would you like a shareholder? I'm like, yes, I would. She goes, how much would you like? I said, she said, go away, work out a number and come back. And so I came back and I said, I need £85,000, and I valued my business at whatever it was. And so we did that transaction because that I knew how to do because I was a lawyer. So that was my first shareholder. Then we came out of that and we decided that we were going to go off and raise 2-3 years later, we were putting the first cold pressed juices into supermarkets. Please don't innovate in this way. It's super painful. Find somebody else's idea, like everybody took mine, and just use those. Honestly, just a word of advice. I was like, okay, I don't know how to raise money to get these juices into supermarkets. So I went and started trying to fundraise. I worked out what pitch decks were. You wouldn't believe, you'd be so proud of me how much I'd learned along this way. So I started going and pitching, and I would turn up at pitch meetings where I would be sitting in front of really nice white men who said things like, juices, how interesting. Do people buy them? I'm like, yes. I'll just ring my wife. I'm not making this up. I'll ring my wife and ask her if she drinks juice. And I'm standing in front of this man with a pitch deck that took me blood, sweat, tears, and 5 small children killed to make. And he rings his wife and he goes, do you drink juice? She goes, sometimes, darling. He goes, oh, how much would you pay for a juice? She goes, oh, I would never pay over £2. They're too expensive. The guy's worth millions, multi-millions. He puts the phone down. He goes, I don't think you're a very good bet as a business. My wife wouldn't pay that much for the juice. That was my whole pitch meeting. I thought, this is such bullshit. I'm never doing this. I did about 12 of those and I wanted to shoot myself in the head. So eventually by the 6th meeting, I put a white man next to me. I'm like, you sit here, I'll smile, you talk. Let's see if that works better. That got us through a bit further. Then I was like, that's still not working. I was like, I can just not come to meetings. See if that makes it better. That made nothing better, because actually they wanted to see me because I was the founder. I just didn't want me to say anything, which, as you can tell, I really struggle with, the whole shutting up and staying quiet part. So I thought, oh, I don't know how we're going to do this, but we needed like £250,000. So somebody said, go and do crowdfunding. I was like, what's that? They were like, here, go on this platform. And I thought there were a few problems with crowdfunding, because once you crowdfunded, people knew everything about your company. They knew what your company had done, all your intimate details. And then if it didn't succeed, they didn't give you any money. I was like, that's just appalling. I hate that idea. So I went and read the Financial Services Act. And I thought, this is really a bunch of documents. So I took a DocuSign, linked it to a video. So I put up a funding page on Lead Pages, I think, and I put a video up there and I said, here's how much money I want. I worked out what the shareholding would be. I sent them from there to a pitch deck, which was all one page. And I sent them from there to a document they had to sign for the FSA. And when they signed that document, they actually bought shares and then they gave me money. And, you know, I created my own crowdfunding platform. I didn't really know that's what I was trying to do. I just wanted the money without somebody not giving it to me. So we crowdfunded and we raised, I think, just under £245,000. We sent out 4 emails, and one of them was like, why BlackRock loves Nosh Detox. Another one was why KPMG loves Nosh Detox. We had their permission, of course. And so we sent out these emails and people invested in us. And then we came and we grew a bit more. And then it came to the next phase of growth. And I was like, you know what? In this climate, people have become so much better. No one's going to mind if I'm brown. They're just going to get over it. So I was like, I'm going to ring my bank. I'm going to ask them for an overdraft. I don't know what to tell you. I feel like just weeping at this stage, because honestly, I have never been so offended or patronized or condescended to. And I'm quite a hard person to patronize, offend, and condescend, as you can maybe tell. I cannot tell you. I developed a whole new level of swear words in different languages that I had to find to cope with the process. I was like, here's what our revenue is. Here's what our turnover is. We were growing so fast. We were doing 20-30% growth year on year. We hit 2 figures, 5 figures, 7 figures. We were passing, just growing like this. And I'm like, I just want an overdraft for 10%. Just give me 10%. They're like, oh, we can't do that. I'm like, well, why not? It's 10%. I came out of these terrible conversations with less than 1% as an overdraft. And I remember moving my girlfriend going, what the hell are you doing? How are you doing overdrafts? She goes, oh, I've been given an overdraft of 40% of my turnover. But she was white and small and white and white. I think that was the whole part, the whiteness. And you try really hard when you're a person of color and a woman to not think people don't like you because you're colored. And you tried really hard not to think people don't like you because you're a woman. And then it's when you're younger, it's because you're too pretty. And then it's because you don't smile enough. And then it's because you smile too much. And there are just places. So this is why I do these things, where I come in and I talk about deep failures and that I've done, because I don't know that lots of people say the things that I say. And I've been running my business for 11 years. And it is so sad to walk into places where you have tried really hard to do the best. For me, my goal was poverty, not to starve. I thought was a really great productivity hack. It was a brilliant goal. My 5-year plan was to eat, clothe, feed, and educate my children. I thought that was a bloody great plan. I was like, why do I need another one? This works really well. And that was my plan. And then it was another 5-year plan where we were going to keep doing that. And then another, and then they grow and they eat more and their schools cost more. And it was just really quite traumatic. They just wouldn't leave home. They were a bit young, of course. 5 and 10 was a bit young. But I had to show up every single day as an entrepreneur and know that I wasn't good enough, because I wasn't good enough for things I couldn't control. Mostly the fact that I was female and I was brown. And it is absolutely soul destroying to turn up daily and have people judge you for things you can't control. No one judged me on the fact that I was ferociously intelligent. Nobody judged me on the fact that I was incredibly good at sales. Nobody judged me on the fact that I got given 12 awards in 4 years for how fast our business was growing. I just couldn't get taken seriously enough for someone to lend me money. And I couldn't get the people who were looking at me to take me seriously enough to say, yes, if I give you money, I trust that you will do something with that money that will be a return that will work for me, or something. I'm not quite sure what was going on in their heads because I didn't care at that stage. And all I had to do was to think of it in a way where I would have to come at it completely differently. I would have to come at it where what I was going to do as a business was going to be what I could do, what my team could do, how we could grow, where we could grow. So it meant that sales and marketing and the brand recognition was a massive thing for us. And I took the fact that people thought that I was too brown and too female and too whatever, and I used that to create a brand out of it. Because I'm like, well, if you're going to find me really difficult to lend to, I'm going to make it difficult for you to ignore me. And I did make it really, I coined a phrase, undismissible. And then I went and bought undismissible.com, because when I grow up, I'm going to do something with it. I'm not sure what, but I'm going to do something with it. And so what I've done is I took that experience where we constantly had to pivot because we just didn't have enough of everything, because you just need sometimes money to grow. And I started actually putting it to good use, because then I would go off and coach other women CEOs and teach them how to grow their businesses, because I'd learned how to get stopped in the process of mine. And I've had so much fun doing that. I don't want this to feel like, I'm hoping this isn't coming across as some terrible experience I've had, because yes, some of it was really terrible and some of it was really harsh and some of it was entertaining as hell. I mean, you've got to watch people falling over their feet trying to say no and not knowing why they're saying no. They can't just go, do you know what? You're just a brown, good looking chick. Get out. How dare you? You just can't say that to you. So you're going to be like, okay, then that comma is bad enough for you to not give me that money. So I wanted you to know that you're not the only people that have gone through this. You're not the only person that went through your version of it. You're not going to be the first. You're not going to be the last. And you can still come out the other end having done amazing stuff. I've taken people through IPOs. I've taken people through blowing up their businesses. I teach them how to handle their boards. I do all kinds of stuff, because I learnt the hard way to become that person and to still stay smiling. And the children are all still alive, which is really great, I think. I honestly think that's a bonus. They're alive, they're educated, they're still got a roof over their heads. I mean, like, what more do you want, you know? And Nosh is still there, and it's grown, and yeah, that's kind of my funding journey. I think it may be a little bit different than most people's, but.
Fantastic, Geeta. Fantastic. Thank you. And just the comments in the chat. So Gabby says, this is so inspiring. Laura says, things you can't control. Yes, great insight. Sanjana says, thank you for saying this and putting it out so more people understand. You're an inspiration. Maxine, Geeta, we hear many speakers, but yours is different. You're real. Farouk loved the undismissible. Joe, hugely reassuring. Emma, I'm starting a Geeta fan club. Who's in?
You guys are so cute.
And Maxine, awesome. So they're fantastic. It's
Thank you.
great. And what a refreshing and wonderful story. And I knew this was coming because we'd had a chat about it. I didn't know the exact detail, but I knew the spirit of the talk. And I mean, we've got time if anybody wants to ask any questions, but
yeah, please.
You know, that was a just absolutely wonderful thing. Here, Jimmy saying, I've never felt more invigorated while doing some cleaning. Amazing stuff. Cleaning, Jimmy, I'm not sure if you meant cleaning. But
clearing?
I don't know. Maybe, yeah, don't know. Anyway, we'll leave that one. But no, absolutely, absolutely wonderful. I guess, Geeta, if you wouldn't mind just sharing your LinkedIn or any ways if people want to reach out and connect with you.
Yeah, it's Geeta Sidhu-Robb. It's everything is basically, I'm just going to put my name in here so you have the spelling. I think in LinkedIn it's Geeta Sidhu, because I didn't get to put the Rob in there. I mean, I probably was trying to raise funding. You just never know, do you?
No, for Jimmy, it was cleaning. He's just moved into a new place. So there we are.
So I'm going to actually, yeah, no, if anybody has any questions.
No, in LinkedIn, you're Geeta Sidhu-Robb.
Yeah, I didn't put that in everywhere, did I?
Yeah, but you're there.
I am in LinkedIn. Okay.
Yeah.
Just you know, there's an absolutely fabulous phrase called "Don't let the buggers get you down," and I think that would probably be the epitaph on whatever it is that we would put as a headstone for me.
Yeah, fantastic, absolutely wonderful, Geeta. That was entertaining and inspiring and uplifting, and everybody really enjoyed it. So many thanks for joining us, and I hope you're able to stick around and hear from the speakers. Great.
Thank you.
Okay, fantastic. So, ladies and gentlemen, this brings us on to our special guest speaker. Our special guest speaker is a lady called Zareen Roohi Ahmed. Zareen and I met just over 2 years ago. In fact, it was about 2 weeks before the first Funding Focus conference kicked off. Zareen and I were both attending a business development program, and we met there and connected and have had a number of conversations over the past 2 years. And she has an incredible story. What we're going to do is we're going to have an extended session. This next session is 40 minutes. And what we're going to do is Zareen gave a incredible TEDx talk, which we are going to broadcast through the Zoom connection. For those of you who get emotional at things, get a box of tissues. I've got one here. I have seen Zareen's TEDx talk half a dozen times, and I cried openly the first several times, and I still get damp eyes. It's an incredibly powerful talk. It's called A Mother's Gift to Humanity. It's just under 17 minutes long. We're going to run the TEDx talk, and then I will welcome Zareen live into our Zoom community. So please enjoy the talk. I'm just going to share my screen, and hopefully this will work for everyone. I'm just going to share that screen, and I am going to go full screen, and I'm going to hit play, and we have subtitles on. So if your audio isn't coming through, there are subtitles in the talk. Here we are, enjoy.
There is something magical about the connection between mother and daughter. It's not just that she actually comes from your own body, but that she too is a female. It's like she's a continuation of you. I believe that this relationship is a force of nature that is fueled by your love for her. It powers our maternal instincts and our fertility, and transfers the sacred power of our monthly cycles to our daughters, and they to their daughters. And from this continuum comes all of humanity in a never-ending Fibonacci spiral. But what happens when this sequence is disturbed? Since primary school, my daughter Halima was passionate about charity work. Whenever there was an earthquake somewhere in the world, The next day, she would be baking cupcakes to sell them at school to raise money for the cause. She subscribed to UNICEF and had certificates from charities like the Red Cross. I worked in the charity sector too, and together we made a pact that after Halima graduated from university, that the two of us would establish our own charity and ethical business. When Halima was 13, I travelled to Pakistan with my father to visit my sick aunt. And while I was there, I made a plan with my cousin in Karachi to establish a charity in an empty property that he owned to help local street children and orphans. And when I got back and told Halima, she insisted that the charity should have her name associated with it because she said, you know, that's what I want to do when I grow up, Mum. So the two of us went down to the local Lloyd's TSB bank and we opened an account called the Halima Trust. As it transpired, the Pakistan project didn't go ahead at the time because of red tape and politics over there, but our account was set up ready for when we were ready. 6 years later, Halima, now 19, secured her place to do her dream course of international relations, specialising in third world development at Nottingham Trent University. It was the 26th of November, 2007, just 6 weeks into her course, when Halima was abducted and murdered. Like any parent, if I ever heard a tragic story involving someone's child, I would think that if that ever happened to me, it would finish me. But as it turned out, this test actually gave me such clarity and resilience and strength as I never thought was possible. It made me fearless, perhaps because after facing my worst fear, what else could possibly scare me, right? The most difficult part that will resonate with anyone who has lost someone was that the love that I would have expressed to Halima by laughing with her and hugging her and talking to her now had nowhere to go. Had I suppressed it, kept it within me, I think it would have corroded my insides. It needed to be externalized. I felt that I couldn't just feel love because that was simply too painful. I needed to do love. At first, I just went into autopilot, making sure that everyone else was okay, a bit like being in work crisis management mode. After all, if I lost the plot, what on earth would happen to my son and my husband and our parents? I didn't actually let go of my feelings and let my emotions pour out until many weeks later, in fact. Then I went through a kind of a reawakening phase where I felt that I needed to fulfill that promise that I made to Halima, and all I could think about was doing her work and the work that we were going to do together. Within a few weeks, we had established a charity in Halima's name. Remember the account that we opened? It was called the Halima Trust. And 3 years later, we'd built a school for 400 orphaned and needy girls in Pakistan. It was on my way back from Pakistan in April 2011, having inaugurated the Halima School of Excellence. I was sitting in the airport lounge in Lahore and thinking about the fact that I needed to go back to work. I hadn't earned anything for 3 years. I knew I'd never work for anyone again, and whatever I did, it needed to connect with the charity, so I would keep that connection going with Halima. Sitting there in the lounge, I picked up a magazine, a Time magazine, I think it was, and it opened straight onto this page, this article describing women in the Zatari Syrian refugee camp and how they had to tear strips off the bottom of their clothes to fold up into makeshift sanitary pads, and all the other horrific things that they suffered, and how their kind of womanhood was used against them like a weapon of war. At that moment, I saw myself giving pads to these women. I actually saw mine and Helima's shared purpose in that vision. That was the birth of the Gift Wellness social enterprise. I embarked on 18 months of research and development to develop my own range of natural menstrual products and a strategy whereby for every pack I sold, I donated pads to women in refugee camps and homeless women and food banks and schools. My first container of stock arrived in January 2013, and the first thing I did before selling a single pack was that I called up a local charity who I'd heard was taking a container of aid to the Za'atari Syrian refugee camp, the same one that I'd read about 18 months before. And I called them up and I asked them to come and collect a number of pallets of my stock to take with them. To my surprise, the guy on the phone said, "Oh, sister, actually, this container is getting filled up with like really important things like food and clothing and medicine. You know, maybe we'll take some of your stuff next time." I asked him where he was, and I drove down there and I sat him down and I asked him to imagine if his mother, his sister, his daughter, his wife were displaced and living as refugees. And no matter what happened, no matter what else was going on, they were going to get their periods. Well, you can imagine, the woman in the headscarf just said the P word. I said, look, the point is that these women that you're taking aid to in the refugee camps are also someone's mother, someone's daughter, someone's sister. He started to cry and he said, gosh, I can't believe that we'd missed such an important part of emergency aid. Needless to say, he sent a truck to my warehouse and filled it with as much product as they could fit in there. And ever since, he's been taking pads to women in crisis in various refugee camps around the world. So I ran my business like this for a few years. The business grew alongside the charity work. Then in 2018, at the time of those all those viral women's rights campaigns like the #MeToo campaign, and there was that report by Plan International about period poverty in schools, I started to get approached by my customers and friends who wanted to actually get involved in this period poverty work that we were doing. This led us to establish the Gift Wellness Foundation, a registered charity with the sole purpose of eliminating period poverty. And this was my journey for 7 or 8 years, during which time we donated over 6 million menstrual products to women in crisis. Then last year, things took a different turn. It was during the first COVID-19 lockdown. It gave me the opportunity, just like everyone else, to take a step back and assess the impact of our work. And I realized that there was something missing. Yes, it had been healing for me to do this work over these years, but I felt that we weren't addressing the root cause of this thing called period poverty. I felt that we hadn't created actual change. We were just reacting. And especially during the pandemic, things seemed to be getting much, much worse. So I started to peel the layers off this issue, and I realized that at a time when we can talk about everything else, this issue of periods seemed to be the last taboo, the last form of discrimination that was so viscerally rooted in our patriarchal cultural DNA that even women wouldn't admit to it. And I thought, if we as women can't embrace how special and important our reproductive system was and try and normalize the conversation, why should men? How could we demand equal rights when we were still trying to hide the fact that we menstruated? And the more layers I peeled off, the more convinced I was that the rights of women to free menstrual products and to be respected for the fact that they were the ones that carried the responsibility for the reproductive process was one of the most important human rights issues of our time. And I realized that virtually every systemic institution, be it school or the workplace or the army, were built around the natural functionality of men. So I thought, so what if, rather than women having to fit into a system that's designed for men, the working structure synchronized around the natural cycles of women's bodies? And from my research, I found only one organization, female-led of course, called Coexist, that actually implemented successfully a period policy and a period-friendly workplace. So I thought, right, what we need to do is to inject this kind of thinking into the bloodstream of every organization. And it's not like it couldn't happen. Didn't that one conversation I had with that charity worker change his mind forever? And believe it or not, I've had my whole family, yes, a traditional Muslim family, complete with long-bearded uncles and teenage nephews and nieces and aunties in headscarves, side by side in my warehouse, labeling and packing menstrual products to send off for charity. So I started sort of questioning myself. With 3 sisters, why was it so difficult, so hush-hush to talk about periods in our house while we were growing up? And when I was at school, if a boy in my class had a stomach pain, he would be sent home to rest. But if I had really bad period pains and blood loss, I'd be sent to the nurse who'd throw me a couple of paracetamol and say, don't worry, it's just your time of the month. And I remembered being at work and having really bad cramps one day and really not feeling well and making an excuse, actually lying to my boss about why I couldn't deliver a particular presentation, and then walking away thinking, why did I have to lie about that? I wasn't doing anything wrong. Isn't it the basic human right for every woman to be able to menstruate without being ridiculed, bullied, or undermined? We live in an age where every diversity of individual is trying to carve out the kind of future that they want to live in that fits in with their natural composition. So now is the time for women to create the kind of future that they want to live in. It's time for us across every sector of society to embrace the menstrual cycle and go with the flow of our periods at home, at school, and at work, with a respect and understanding of the hormonal changes and the stages that our bodies go through, and the knowledge that this apparent weakness is actually one of the most miraculous and precious gifts in the universe. I hope that my story has conveyed the synonymous relationship between hardship and periods. Both involve pain and difficulty, loss, recovery, and renewal. For me, it goes full circle, all the way back to that idea of passing on that sacred trust, fueled by love, to the next generation. Although in my case, it's not just through my own daughter, but through thousands of daughters who are benefiting from that decision to not just feel love, but to do love. Thank you.
Ladies and gentlemen, it is an honor to introduce you all to my very dear friend, Dr. Zareen Roohi Ahmed. Zareen.
Oh, bless you. Thank you. And thanks everyone. And I apologize if it made anyone emotional. It makes me emotional as well when it was quite a cathartic kind of experience to do that TEDx. And I'm having a similar experience writing my book. I'm almost finished now, thank goodness. But it's it really does. You know, you don't go into your own story, do you, very often, and examine yourself to that extent. I want to know if people have got questions, but before that, I thought it would be a good idea to update you on what has happened since I did that TEDx last year. And because it's been quite a journey, and I've gone through various phases, and I really feel now that what I'm embarking on now is what is the kind of the true purpose, and it's the reason why I everything happened. And I really believe that the businesses that do good or try to do good alongside making their profit, you know, they are the ones that will survive through anything, because people are invested in you. You know, they buy into you and your cause, and especially nowadays. I get that a lot. And during the pandemic, when I had to completely pivot my business from selling through retail outlets to pivoting it to an online business. I'm talking about selling the products, you know, the physical products. I was amazed by the amount of support that I got from my customers, who were out there looking for us on social media and asking, you know, are we okay? And, you know, what can we do? And sharing our products with other people and sharing our story with other people. So yeah, it's, I think there's a lot to be said for social enterprises and businesses that that incorporate a cause within their business. So what is happening right now is that, I mean, we expanded our range a couple of years ago as well to incorporate shampoo bars and conditioner bars and body wash, face wash, hand wash, and all that sort of thing, so that you know, because that's what we do toiletries. But like I said, I wanted to get to the root cause of this thing, this period poverty, or this discrimination against women, and I was determined to find a way that we can address the mindset of discrimination, of that kind of, it's a very visceral sort of natural response to women. in the workplace, at school, at home, in communities. And we came up with a couple of physical products. One of them is called the period gift box. That was the first step. And the period gift box is something that parents buy for their daughters when they start menstruating. And it's full of lovely, comforting things and lots of information for parents and chocolate and things like that. And then I thought, okay, so that's kind of schoolgirls, something for schoolgirls. What about women that work? What about women like that who are going through, you know, scenarios like the example that I shared about when I was going in to give a presentation, and, you know, I realized that I'd started menstruating, and I thought, you know, what am I going to tell my boss? How am I going to get out of this? Because I'm going to humiliate myself otherwise. And, you know, these are, whether it's menstruation, whether it's pregnancy, whether it's the menopause and everything in between, from endometriosis to polycystic ovaries to whatever, headaches, migraine, all the other things that women naturally, you know, may experience. What can we do about women in the workplace? And I started researching this, and I found I also found that the government had an objective after Brexit to try to increase the number of women within male-dominated industries. And I thought, well, that's going to be interesting, given what, you know, what I was trying to do. So I said, okay, let's target those industries. And the result is that I'm in the process of currently demoing this, and I've got my first contract, and it's completely different to what I was doing before, or what I'm still doing, but it's completely different to selling physical products. We are in the throes of launching our Go Flow consultancy. So we go into STEM industry companies, such as construction companies and engineering, science, technology, and so on. And we do a mapping exercise, and then we do where we identify what the facilities are like for women, what the working conditions are, you know, what the ratio is from men to women, and so on. After this mapping exercise, we then we then do a training in groups of 10 with the staff. And what's different about our training, because, you know, diversity training and gender equality training is commonplace in most reputable companies. But what we do is, but what they don't do is they don't touch on this subject. They pussyfoot around gender equality and talk about sexual harassment, the gender pay gap, and all these things, but no one says the P word, and no one talks about the menopause, no one talks about pregnancy, and no one talks about, you know, the fact that every woman goes through this stuff, right? Yep. And what do we do in a workplace? So the way that we're addressing that is that in the training, we do the training using VR technology. So we've created these scenarios and we've filmed them using 360 cameras. So you put the headset on and you're in the environment, and you step into the shoes of a woman within that workplace, and you experience what she's going through, whether it's a period situation, whether it's a pregnancy situation or a menopause situation. And you go through the scenario and you have options. You know, do I tell my boss the truth? Do I make up an excuse and say I've got food poisoning? Do I or do I go through with the presentation and see, hope for the best? And so so that's what we're doing. And then we, after the training and the workshop and all of that, we then sit down with the HR departments, and we help them to write their policy based on, the information that we've gathered from the training and the mapping.
Fantastic.
And we design a new policy. So it's that's what we're doing at the moment.
Brilliant. That's really cool. I mean, we don't have any questions through yet. So please, anyone, if you've got questions for Zareen, please put them in the chat. Taryn said goosebumps. And Jimmy, who's in the middle of moving house, just wrote such an interesting. Whoops, sorry, I had to put down my boxes and couldn't help but listen. Thank you so much for sharing your story. Such an interesting and unique way to get people to stretch the empathy muscle.
Yeah,
and I love what you're doing to bring innovation to things, because yeah, I've worked in big corporates and I've been sent on, D&I training and all of that. And as with many of those big corporate programs, there's some great big program rolled out and you're working in a company with 10,000 people and it's very bleh. And most people come away from these things saying, okay, fine, whatever, the latest corporate initiative, and there'll be another one along in 2 weeks. But I think the approach that you're taking and the using technology to allow people to really step into a woman's shoes. So a few more comments come through. So Geeta, utterly amazing. Thank you, Zareen, for being so fabulous, committed and inspiring.
Thank you.
Maxine, absolutely innovative. Bahar, you're great. Thanks for raising these issues. Maxine, again, not the traditional D&I policy. Sarah, this is a wonderful story, so authentic, and what a way to celebrate your daughter. And I agree. And I have 2 daughters, and as you said in your talk, I can't imagine what you went through, and yet to see the strength and the resilience that you developed, and the bit that I always cry about is when you talk about doing love, because love is a verb.
Yeah.
And it's just such a powerful thing that you've done. So if anybody has any questions for Zareen, please do put them in the chat. Where to next?
So, well, we're currently demoing this in a construction company that's working in Canary Wharf, and they're part of a much bigger, a huge sector of the construction industry. And then we're also looking at engineering companies, where, I mean, we've opened a bit of a can of worms. It's opening new doors all over the place, and I'm really excited because for once we're actually addressing root causes as opposed to just addressing the symptoms and trying to help people who are victims. Which is still very important, and we've donated millions of pounds and we continue to do that, and we still donate. From every pack we sell, we donate, and the environmental stuff is very important. I want to encourage a kind of, to make it uncool to have plastic bottles in your bathroom, because you don't need them. I wash my hair today with a shampoo bar, and it works just as well. And you don't need to be throwing away all of that plastic, because a truck full of plastic enters the sea every minute of every day. Yeah,
well, which is a foreshadowing to one of our later speakers. Okay. But yeah, no, you're absolutely correct.
And so I guess gift wellness it's a gift on many, many levels, and gift is the best word that I could have found, for my brand, because it is a gift on every level. It's a gift to my daughter. It's a gift to the environment. It's a gift to the women who receive our products. and it just continues to give, and it's a gift to me because it's been more than just a survival strategy. It's what I say to everyone who I'm working with a lot of young people at the moment. I've got Kickstarters, you know, the Kickstart scheme.
Yep.
And so many young people have got mental health problems at the moment. And I do this thing called timeline coaching with them. It's an NLP thing to help them to get over trauma and things like that. And what I say to them is that, you know, you think that this test that you've been tested with, was such a great test, such a big test, that it's finishing, it's going to damage you to the point where you can't be fixed. But in actual fact, the bigger your test is, the better it will make you, the better you will become. And that's the lesson that, you know, that I've learned from this. It's that the bigger the test, the better you will be.
Yep.
As a result of it. I have no doubt in that, you know.
Absolutely. Yeah, no, definitely. We've had another comment through from Joel saying, thank you so much, Dr. Zareen. Please reach out to Win Trade Global, which is a women's network. I actually know the founder of Win Trade Global, Yvonne Thompson. So I will introduce you to her.
Yeah.
I'll do that offline. I'll just make a note here.
Thanks, Joel.
Zareen.
Does anyone have any questions? Because I love answering questions.
Does anyone have any questions?
Anything.
This is your opportunity, people. Post a question.
What I'll leave you with then is.
I was gonna. Sorry, Dr. Zareen, just really very inspirational story. One thing I'm starting to hear people talk more about, particularly as you kind of now the openness around your journey in the menstrual product and supporting the Syrian refugees and how that's kind of developed. But one thing in terms of kind of the women's agenda that I'm hearing more about is kind of focusing now on the menopause. Are you in the process of kind of creating something around that? I know the focus is on kind of GoFlow and the VR, which sounds brilliant. Yes. I think to David's point, actually being in a situation, particularly in large corporate, and if you're doing that in the construction sector and it works well, my word, that'll work. I don't want to kind of stereotype, but I think it would work well anywhere. But what about the menopause?
So our VR training and the GoFlow project covers the menopause as well, and covers pregnancy and everything to do with a woman's reproductive system from start to finish. So we have a scenario which is a menopausal woman and what she's going through. I mean, to tell you the truth, I've recently gone through that myself, and I'll tell you one thing, if I'd been in a job and working for someone last year, I would have left. And that's a tragedy, because and it's one of the reasons why there are so few women leaders in organizations, I'm convinced, because women will work their way up through, throughout their careers. They're gaining all that experience and knowledge and wisdom. And then when it gets to the point where they are the age and at the right stage to become the directors and to sit on those boards and really reach the powerful positions in those organizations, the menopause hits. And then they either have to scale back or they leave and they retire early. And it's one of the reasons why there are very few women leaders in these organizations. So
really,
these are things that we want to change. But if we could change actually flex the system around women rather than women having to fit into a system that's designed for men and always was, why not? the lockdown and the pandemic has, if nothing else, has taught us that we can work from home very effectively, that we can be flexible. Many people are choosing to work from home now rather than having to go into an office. And if you are having hot flushes and you're feeling that all the menopausal symptoms, from fatigue to hot flushes to the mood swings and all of that, which happen very suddenly. I've been in meetings on Zoom calls where, thank God I've been at home, because I have to glug down half a pint of water, and just kind of take a breather, because I'm having such a painful, experience. Hot flushes aren't just about feeling hot. They can be very painful and really horrible and really knock you out of your focus, but you get through it. But during that phase, and thank God I'm through it now, but during that phase, you are in jeopardy. You can, that's the point. If you don't have the support, then you can lose your job, or you're forced out in some way, sidelined. You won't get those promotions. You won't have those opportunities. So it's critical.
Thank you, Zareen. We've had a couple of, and thank you, Greg. We've had a couple of comments, questions come through on the chat. We're sort of running out of time, but I'm going to make an executive decision and carry on for another couple of questions because this is such an interesting thing. So Jimmy's come back just saying, destigmatizing these issues is so vital. We shouldn't be afraid to have these important conversations. Events and moments like this make me so hopeful for future generations. And Sarah said, I 100% agree with this. I had very similar experience. Drew wrote, what advice would you give to young entrepreneurs today?
My advice would be, firstly, that, from when I started my business, and I hadn't done business before, it was a different time. The technology wasn't there. It was quite expensive to set up a business, whereas now anyone can, everything is at our fingertips, and there are so many resources that you can use. And again, my number one advice for everyone would be to incorporate the humanity side of your business. And if you focus on a cause, I have an acronym that I use, which is GIFT, of course. And when I'm training and things like that, and G stands for gratitude. It's about being grateful, even for what you're tested with. And I is for illustrating your vision, putting it down on paper, writing it down, and visualizing it. And F is for focusing on a cause and becoming fanatical about it, and really sort of visualizing it. And T is for trusting in your own abilities, and the fact that if you're doing something good, then you can't lose, and sticking to it. So, I mean, I've just gone through them very quickly, but we go into great detail, and that's what it'll be in the book in more detail.
Thank you so much. And then one last question before we break off for the breakout sessions. From Thibaut, do you think virtual reality is still before its time, or are you seeing it being embraced in the workplace?
I think it's going to be one of the number one tools for training very quickly, and it's already showing that. It's a great way for what we're using it for. As someone said earlier, it's it's a wonderful way of creating empathy, because you're immersed and you're experiencing what the person is. It's a sort of a first-hand experience almost.
Yeah.
The only thing missing is sort of the pain. So we're thinking about how we tackle that. You know, maybe we give them a punch in the stomach while they've got their headsets on. I don't know.
Brilliant. Brilliant. And then we just had one last comment from Maxine. Thank you, Dr. Zareen. You're a gift.
Oh, bless you. Yes.
So, Zareen, thank you so much for joining us and sharing your story.
You.
It's such a powerful story. And
thank you for inviting me, David.
Oh,
it's
my pleasure. And I hope you can stick around for the breakout and to see some of our other speakers.
Yeah, sure.
They're available. Wonderful. So, ladies and gentlemen, I hope you had a good breakout session. And I'm delighted to welcome you back to the final part of our event, where we have our last two speakers. And I will hand over now to my colleague, Jacob, who will introduce Laura.
Introducing our next speaker. She's an angel investor, a non-executive director for 2 firms, and the founder and CEO of Seep, a company whose mission is to shake up the dusty household essentials for the good of the people and the planet. Let me kindly introduce you to the virtual stage, Laura Harnett.
Thank you very much. And yeah, I'm just hoping, is the slide back up there, or everyone else can see it, but I can't? Is that the...
Tivo? Have you got Laura's slide? There we go.
Oh yeah, amazing, fantastic. Well, thank you so much for inviting me back, David. I remember being on a sort of physical stage for your very first funding focus event. I think it was 2 years ago, maybe even more than that now.
It was 2 years ago.
It was 2 years ago, and at the time I was kind of a beginner angel investor. You know, I'd come out of the corporate world and was angel investing, and I was kind of sharing some of my early insights, and it feels like, you know, everything has moved on very rapidly. So I've continued to angel invest a bit, but the most important change really is that I've set up my own business. Now, a lot of people start with starting their own business, and when they scale it and then sell it, then they become angel investors. So it's quite an unusual journey to do it this way round. But I've got a few minutes basically to talk a little bit about my journey, and then I wanted to share a couple of slides, one about what I wish I knew when I started my entrepreneur journey, and the second one is what I wish I knew when I was still an investor. And you know, and hopefully some of those things that I've learned will help some of you in the room, because I understand quite a few of them are you're entrepreneurs yourself, and obviously many of you are probably women, which some of these will resonate hopefully. So a few minutes just about my journey. So I started off as a buyer for a food company called Compass Group. I then went into strategy consulting for consumer and retail brands for 10 years. When I had my children, I had to stop traveling, so I went in-house to lead the strategy team at Kingfisher PLC, which is the kind of parent company for B&Q and Screwfix. And then I moved to Selfridges, and there I was the chief of staff there and managed all of the digital program, lots of the investment programs that we had there. And while I was at Selfridges, I learned a huge amount. And towards the end of my time there, I was diagnosed and treated for breast cancer, which, you know, I'm safe to say, you know, very pleased to say that I'm out the other side. But it really does make you think about what you want. And I was roughly halfway through my career, and spent all my career in big corporate organisations, and decided that I wanted to kind of go and explore some other things. And so I left and became an angel investor with an amazing angel syndicate called Angel Academy. An Angel Academy support female entrepreneurs, but also encourage more women into angel investing. And for those of you who haven't come across Angel Academy and maybe raising money, they have you can pitch to them a few times a year, and I'd really recommend them. So I was doing some angel investing
investing. I had my non-exec work and I was doing a bit of consulting, and all of that allowed me to see how different a startup was, and the pace of decision making, and how exciting it could be compared to kind of my corporate sector experience, which was very slow decision making, a lot of kind of presentations that you have to share with other people to get decisions through. And so I had a sort of insight into that world, and then and I'd been sitting on this idea for SEEP for a long time, you know. And if I just very briefly talk to you guys about SEEP, so, you know, I'm a eco-conscious shopper. I walk around a supermarket, I pick the sort of better for the planet products like recycled toilet paper, organic food, but going down the cleaning aisle, you know, on one side you've got eco and methods, so some better sprays, but actually on the other side of the aisle are these household essentials, that's sponges, cloths, mops, dustpan and brushes, bin liners, and none of those, you know, very few of those have got any eco alternatives, and certainly not in the mainstream grocery channels, and so you really have to look hard to find them. So that was my idea for SEEP for many years, not many years, but like 2 years. I'd had the idea and I just thought, there's no way, I'm in my 40s, I've got, you know, a mortgage, I can't possibly set up my own business. And through that period of kind of meeting more and more founders, and then it was the beginning of lockdown, it just gave me the space to decide to go and set up SEEP. So we launched SEEP a year ago, and we're now a team of 4, and some freelancers, contractors helping us. We're doing, you know, sort of really healthy sales every month. We're selling direct, we're selling through retailers like Selfridges, and we've just won a grant from the Mayor of London to support some of our product innovation. So in not very long, you know, now I'm getting comfortable with calling myself a founder, really, and that's taken quite a while to get my head around that. But that's a really quick introduction to me. If I just move on to what I've learned, so the next slide, please. So, you know, there's so many blogs out there about, you know, how so many blogs out there about how to succeed as an entrepreneur. You know, all of them are really useful, but these are the things that I think I wish I'd known a year ago or 18 months ago when I was first setting up SEEP, that hopefully might be able to help someone else. And so I think particularly as a woman, I found that asking for help sometimes is really difficult. I don't like asking for favors. I like to think that I have the answers and that I can do this on my own. But I would say that every single time I've plucked up the courage and asked for help, it's come back, and you know, everyone has been so helpful. And often I would just overthink how to write an email, overthink about how to introduce myself. But honestly, just, you know, I think don't just lose the fear about reaching out and asking people to support you. And you know, I found every time I've done it, it's come back, you know, more than I thought it was going to. So I think that would be my number one thing. The number two thing, this event is all about fundraising, and you know, again, I felt really awkward about asking people for money and asking them to invest in me. I didn't really have the confidence in it, despite the fact I'd been an angel investor. And I think what I realized is, and what I would do if I had to do it again, is talk to everyone about fundraising early and often. So if you think you're going to do a fundraise, don't just drop it into conversation with everybody, with family, with friends, with old colleagues, with people you've met in the pub. Like, you never know who you're going to talk to, and you know, and you never know what their circumstances are and whether they'd be interested. And I think I found that a lot of those, you know, just dropping it into conversation, you know, not really, you know, sometimes it's an intro that might come out of it, or sometimes the person might turn around and say, look, when you're fundraising, please keep me in mind. And so I would just encourage everyone to do that early and often. The next thing is about SEIS and EIS tax relief. I'm not sure how many of you know about this, but there's some really generous tax relief for investors into early stage businesses in the UK, and I would just use those really strategically. I was so desperate to raise my first round of funding, and I kind of just said yes to everybody. And actually, what I'm realizing is that it's a really great hook to get some kind of more serious investors in, who then can potentially follow you in future rounds. And so I I definitely think about how you can use that to the best effect. The second, then some more kind of operational things. So slow, and everyone loves that sort of hockey growth, like hockey stick growth curve in terms of sales. But sometimes, we had that this year, especially during lockdown, and actually it can create more problems than it solves. Actually it gets your business to creak at the seams. If you've got a service business or a product business, be careful of really, really strong growth, because it's very difficult to keep up, and it has implications on your cash flow. You then need to buy the next set of products or invest more heavily. So I think slow and steady growth that you can manage and scale around, I think is probably healthier. And the last one, which I'm sure everyone knows about, is about ruthlessly prioritizing. As a founder, you're doing everything. There's so many, buck stops with you. You're doing everything from HR to legals to product to sales calls, and I found just having 3 things that I know that are super important that I can't not do each week has really helped me. Those are the things that really are going to support you long term, and I think the thing that's really helped me there is having the right coach. And I've never really had an executive coach through my corporate career, but I think as a founder, especially if you're a female founder or a sole founder, I think it's crucial to have someone to hold the mirror up and to challenge you and to be your cheerleader when you're the going is really tough. So 1 year on, those are some of the things I've learned as an entrepreneur that I think will hopefully help you. And then moving on to the next slide, which are the things that I wish I knew when I was an investor. So I've made about 10-15 investments. They're all relatively small. I'm not investing anymore because my focus is now really on SEEP. But I think these are the things that I now know, having done angel invested, and also I've been on the other side of the fence. So the first one is to start slow and learn. I got really excited. Every business felt really, like it was going to be the next big thing, and I probably went too fast. I only have so much money to invest, and so, and what they say is you really need to hold back, because if a business is going well, you want to go back in and reinvest at a later stage. So start slow, learn, understand what you liked, what you didn't like about a business, and you really do need to see dozens and dozens of decks to see what is good. And I think this is probably a good tip for the entrepreneurs out there thinking of fundraising. And it's links to the next point, which is around traction. But I think there are so many decks out there, really lots of them are way too long, 20-30 slides. But any evidence of early traction numbers, you realize that actually when there's good evidence, you see that in a deck very quickly. And if there isn't good evidence of traction, you really have to hunt for those numbers. And so that I've learned that over time, and that brings me, so the second point really is sustainable traction is everything, and the sort of hockey growth traction, because they've had a business has had a good run, is great, but actually are they able to maintain it? Looking out for organic growth, customer acquisition costs, good gross margins, all those things are telling you that this isn't just a great idea, but it's got the semblance of a scalable business. And I think those numbers for me are still really quite important in the early stages. The next one is about businesses. So and I think everyone wants to run after the next big thing, the next super fast grocery startup or whatever it might be. But I think, and this shouldn't be unsexist, it should be unsexiest. So this is my typo, but it's what I found is that of the portfolio that I've got, actually the real sort of steady eddies that are doing really well are sometimes the businesses that just aren't that sexy. They're in relatively less competitive fields. They don't tend to be consumer businesses, and they do make, if the numbers are there, they make good investments. And actually some of my investments that were the next big thing, VC backed, are the ones that haven't done so well. And then finally, and I think this is a good point for some of the entrepreneurs here, is that not all businesses are investable. And so what I've seen is that everyone kind of assumes that they have to rush out to VCs and try and get on every accelerator and all the angel investment programs. But actually some businesses are lifestyle businesses, or they're really, they're profitable, good cash flow generating businesses. And, raising equity funding isn't always the route through that. And I think I've learned that myself, and also, since seeing how many entrepreneurs have struggled, how much time they've given up to go to fundraise when there are alternatives. And when I talk about alternatives, those are things like grants, some of the cash-based businesses like Clearco, who'll lend you based on your revenues. There are some, and there is also a way of trying to get to cash flow positive or some cash flow by bringing in some products early, and things like Kickstarter as well, which effectively are pre-sales, which can then help you fund your business. So, I think some of the businesses I've invested in, in hindsight, probably aren't very scalable and probably shouldn't have done, equity rounds, because they're probably not going to exit. But I would just look hard at some of the other options that might be out there before you give up some equity in your business and spend a long time trying to get funding. So that's probably a wrap. Those are the things I've learned from both sides. I don't know if I'm on time, and whether there are any questions.
We've got time, so there's no questions in the chat yet, but if anyone has a question for Laura. But no, I really loved, Laura, the fact that, as I said when I wrote at the beginning, it was great to have you back as our first ever person who's come back, but come back in a different guise, and really interesting to hear your story, how you've done it kind of backwards, people might say, because you started out as an investor and then became an entrepreneur. But there's no forwards and backwards, there's no fixed rules in this. I thought there were some brilliant tips in there. I think one in particular that I'll pick up on now was where you said, slow and steady growth versus exponential growth. And it's so interesting because when you're getting out there pitching sort of, Series A, Series B type rounds, well, they want you to be doing that. And I guess part of the issue that you've got is you're going to be doing that off the back of the investor's cash that's being brought into the business, because, and this is something that, I always tell people, fast growth devours cash. Because you're as you said, you're having to buy your next lot of stock. You've got customers sitting in accounts receivable and they haven't paid you. If you're a tech business and you're taking off, well, all of a sudden you got to hire in 20 new developers, and 20 developers at 80 grand a pop is an awful lot of money. That's 1.6 million gone pretty quickly. And even if you only think about it for the first 3 months in cash flow terms, it's still 400 grand.
Yeah,
it's
and it's a vicious cycle, right? So if you raise money, from a VC or someone that's expecting really high growth, then you're forced to grow, and actually it puts a huge amount of pressure back onto the business. And I've seen the kind of hard side of that, where it's you've taken that path, and actually you then become a bit of a slave to it, and it means you haven't got the option of slowing down a bit.
Correct. Yeah. And if the business isn't delivering, the VCs will come in and as a very good friend of mine puts it, they'll be all over you like a rash.
They'll be all over you like a rash, or they'll drop you, which means there's no more money. And then you're really, that's even more tough. Whereas if you're building it sustainably with other sources as well, then, that's less likely to happen.
Yeah, exactly. So does anyone have a question for Laura? We've got about a minute and a half left. Otherwise, I'll ask another question. Laura, a lot of our audience are early stage entrepreneurs. You've touched on some of your things you wish you knew, but if they were to come to you and say, okay, Laura, what's your advice? I'm just starting out. What would you say?
I'll take that some of these are, you know, so really just starting out, and I speak to quite a lot of people who are at this stage, you know, they've got a good idea, they're really tempted, you know, they're just maybe taking some baby steps. And you know, I know that feeling really well when you're just starting out. And I'd say that the way that I did it was, you know, and just decided to take the plunge. And once you've decided to take the plunge and starting to put money in it, then there's no going back really. But I just set yourself a time frame, you know, which is, you know, for me, I set myself 3 months, and I said at the end of that 3 months, I'll have a business plan, so I'll know if it's viable. I'll have a cash flow, so I'll know how much money I need to just get off the ground and to a point at which I need to raise money. And if those two are both you know, I'll do some competitor analysis. And once I've got the answer to those, you know, then I need to make a decision, and I set myself a timeline so that I didn't just drift into endless analysis and wandering. And I think once you've made that decision, then you just need to chip, you know, as especially if you're the only one in the business at the beginning, which most people have, you've just got to chip away at it, you know, a little bit every day. Just keep swimming, you know. It's you know, and ruthlessly prioritize. And I think, you know, just know what are the 3 things that are going to help me get to that next stage of the business. And, you know, it's easier said than done when you're, you know, knee deep in things going wrong and people asking for things.
Yeah, brilliant, fantastic. Thank you. We've had one more question, but we're out of time, I'm afraid. So thank you very much for coming.
Thank you very much
Laura.
for having me, David.
It's been great to see you. And I'd like now to, and I hope you can stick around to hear our next speaker. She's quite an inspirational speaker. I would like now to hand over to my colleague, Drew, who will introduce our final speaker of the day. Over to you, Drew.
Good evening, everyone. It is with great pleasure to announce our next speaker, who's actually the winner of the 2015 Charity Comms Inspiring Communicator Award, has spoken 5 times at the TEDx events, shared the stage with the likes of Theresa May and Microsoft CEO Satya Nadella. Emma Lawton is the co-founder of the tech startup More Human, a venture she started as a part of the Zinc VC cohort, and it is with great pleasure to give it away to you, Emma.
Thank you very much. Am I unmuted? Can you hear me all right? Yeah, you got me. Fantastic, thank you. So hi everyone, I'm Emma. I'm one of the co-founders of More Human, and we're an early stage startup building what we're calling the Squarespace for events. So basically software that turns anyone into a brilliant organizer of really high quality, well-attended events. I was also diagnosed with Parkinson's 9 years ago at the age of 29. I was not expecting Parkinson's at 29. It was a big shock to me, but I'll talk a bit more about that later. Before I share too much about myself, I'd really love to play a quick game if that's okay. So I'm going to need your help here to help me with this. So you'll all probably remember the popular family game Guess Who? So if you can just bring up my first slide, please, with the 3 co-founder faces on. Yeah, fantastic. And so basically, these are my co-founders, Mel and Duncan. I'm going to read out 6 career kind of CV points of things that we've done. And I'd love you to, using the polls, vote for who you think each one refers to. So just kind of on looks on sort of your first judgment on who you think they refer to. So the very first one is, this person is a chartered engineer who worked for Rolls-Royce designing jet engines. Who do you think that was? Oh, I have to vote as well.
Step in, since you might not be able to see the results, but I can let you know how many people have voted. Oh.
Thank you.
It looks like someone else has ended the poll for me.
Oh.
Would you like me to share the results?
Please, thank you.
We have had 63% for Mel, 13% for Duncan, and 25% for Emma.
Very interesting, thank you. And the next question is, I'll reveal at the end which ones were the right ones. This person founded the Cancer Research Innovation Lab, which was a social ventures lab, and won £10 million CEO investment to do so. Who do you think that was?
Answers are streaming in. We've got 35%, 40% of people have voted, 45. So I'll give you another 5, 4, 3, 2, 1. We have had 29% for Mel, 57% for Duncan, and 14% for Emma.
Interesting, okay. Third question. This person has been a trustee for a number of charities, including Mind and a Women's Literacy Foundation. Who do you reckon that was?
I wish I could vote in these as well. I'm really curious. We've had 65% of people, 70% of people have voted. We'll give you another 3, 2, 1 seconds, ending the poll and sharing the results. 60% for Emma, 20% for Duncan, and 20% for Mel.
Fantastic, thank you. Okay, fourth question. This person is championing the rebrand of our app to feature pink as the lead colour. Is that Emma, Duncan, or Mel?
There we go. Answers coming in. We're doing pretty well. It looks like you're all pretty used to answering polls by now. So I'll give it another 3, 2, 1. I'm ending the poll and I'm sharing the results. Ooh, 81% Emma, 19% Duncan, and 0% Mel.
Excellent, thank you. Number 5, this person spent a year in a senior role at an insurtech startup.
Come on, guys, I want to see all of you voting really quickly now that you all know how it all works. There we go, we're getting the numbers up. So I'm going to give you another 3, 2, 1, ending the poll, sharing the results. We got 33% for Emma, 47% for Duncan, and 20% for Mel.
Okay, and final one. This person is the most likely to still be up and working at 3 a.m.
You know what, I would guess it'd be all 3 of them. But which one do you guys think it is? There we go. I think almost everyone has voted. So I'm going to end the poll and share the results. 73% for Emma, 70% for Duncan, and 20% for Mel.
Thank you very much. So if you can possibly just take us down off the screen, that'd be great. Thank you. And I'll reveal the answers. So basically the first 2 were Mel. So Mel is an ex-engineer. You all did really well on that one. She was also the one that founded the Cancer Research UK Innovation Lab. The next 2 were Duncan. So Duncan is sorry, my Parkinson's is really kicking off. He's a trustee of a number of charities, and he's actually been leading our rebrand to pink, which is quite interesting. He's the only one of the 3 of us that doesn't have pink hair. And the last 2 were me. So basically I used to be a senior role in Insurtech, and I work often until 3 o'clock in the morning because I'm terrible at sleeping. So you sauced me on that one, probably because of the bags under my eyes, I imagine. Now, I'd imagine in the case of most of you that those decisions would have been made with at least a bit of thinking before you made those decisions. It would have been probably speed thinking, but it's thinking all the same. And if you were thinking, I'd imagine that because you're human, some form of bias might have crept in, and we all do it. It's either based on whether, you know, how we look, the fact that you knew I have Parkinson's, or the gender of each individual. There's probably a high chance your brain will have been using previously gathered data, even if you didn't realize it at the time. And it really happens a lot without us noticing we're doing it. And quite embarrassingly, I found myself sitting in an interview telling the other hiring panel members that I thought the candidate we'd just met wouldn't be good in the role we were hiring for because she wouldn't have enough clout. And realizing that I just judged both her age and gender, I was completely mortified. And I basically excused myself to go and have a bit of a chat to myself in the hallway. I'm just gonna take my neck brace off for a second because it does restrict my speaking sometimes. So I'm just gonna take that off so I can speak to you a little bit more clearly. And on this occasion, I've probably been the victim of unconscious bias probably more times than most people because of the things I'm kind of dealing with. And I was completely devastated that on this occasion, it had been me that had done the same thing to someone else. And she was completely capable of holding her own. She's doing the job now brilliantly. And she's very, very competent. And I feel like as a fairly young looking, differently abled, neck brace wearing, pink haired female founder of a tech startup, I'm not probably really the person you'd expect to see when you arrive as an investor in a Zoom pitch. But I'd love to share with you how that became the case that that's something I'm doing. My founder journey itself actually started sort of unintentionally. I've always had a very entrepreneurial spirit. My family are kind of the kings and queens of the side hustle. They've always got something going on. But I had no real intention of starting my own company, mainly because after a couple of sort of freelance designer stints and a run at starting my own agency, I knew I wasn't particularly gifted in the solo working concentration department. I'm very easy to kind of wander off and find something shiny. And a couple of years ago, I was writing a bucket list vlog and trying something new every day. So when I was sent an email about trying out for the Zinc VC Business Builder program, I thought, well, I've definitely not done that before. That's definitely something new, so I could give that a bash. And I got onto the program and was completely thrilled. But I'd just taken a new job, so I wasn't really expecting to be an entrepreneur. I wasn't kind of set up financially or mentally, really. But on the Zinc program, I met Mel and Duncan, and we became co-founders, and we set about building what we wanted our ideal company to be. We think a lot about our culture and our sort of dream culture. And we've got a product that we're excited about, and we felt we could really have a real impact on the world with this product. And I'd love to just take a moment to show you what we're building, because quite frankly, as a female disabled, pink-haired and all the rest of the stuff founder, I should never really be looking a gift horse in the mouth. So it's a great opportunity for me to talk about what we're doing. So if you could possibly just bring up the slides showing what we're working on, that would be great. So that's the last slide, please. Yeah, brilliant, thank you. So our software is primarily aimed at the leaders of social groups, clubs, societies and spaces who want to be able to put on more events, but they're already really stretched in their workload. So it helps members of their community step up and build what we're calling kind of grassroots events that are really high quality and very well attended, which is always the challenge when people step up and do those things themselves. It's using demand and audience insights. So basically it's making sure that we're serving up events options to organisers that they can select from that their members actually want. So you don't go on putting yoga on for 6 weeks when actually everyone really wants Pilates. You know ahead of time what they want. And we're building a library of ready to host premium event blueprints, which we're working with premium brands so that we know they're good optimized events. And then community leaders can actually add their own templates to support the creation of on-brand grassroots events. So if there's like an event that they put on every year, they can add that to the calendar and other people can take it and run it and do it their own thing with it. You can basically then customize it using our WYSIWYG editor. And so you kind of feel like you've got your own stamp on it. It feels like your own event. And then it's all just pushed to the social channels and comms tools they're already using. So it's really easy for people to feel like they're just using what they normally use. And the organizer gets to focus on the bit that they do best, which is basically being a fantastic host. So thank you very much for sharing that. That's my little plug moment, because you only get these opportunities ever so often to talk about what you're doing. When it came to starting our fundraising efforts, I seemed like the more natural choice to take the lead on it, even though I'm probably maybe perhaps the least reliable to be able to turn up to a meeting, or perhaps the least at least kind of able to speak at certain given times and things like that. But I actually had years of speaking at events and getting out and about to meet people, and my network appeared to be the strongest. And naively, I thought this might mean the process would be easier to find people to invest in us and love our products as much as we do. And as Spencer mentioned earlier, I started reaching out to my contacts and I found that they weren't investing in our sector or our stage, or they stopped investing altogether. And I just thought, oh God, I hadn't really thought of that being a thing. So cold outreach sort of became our main method. We kind of exhausted a lot of our warm contacts. And it wasn't until I gallantly launched myself into the first Zoom meeting I had with a VC that I realized I was actually really poorly prepared for what was about to happen. I'd never done anything like this before. I didn't really know the terminology or the lingo. And on the face of it, it wasn't a particularly difficult meeting. The questions were pretty fair and they didn't probe too deeply. I just suddenly became very aware that while I was attempting to carve a space in the business world, my body hadn't actually received that memo. And we're still trying to basically just do basic functions day to day. And I was not kind of working with it in the way that it wanted to. So I was hugely distracted by the fact my foot had sort of made a bit of a fist under the table. And my arms were shaking so violently that I was likely to end up on the floor. And I just suddenly thought, how am I supposed to focus on what I'm supposed to be doing here? This just feels so unfair and unreasonable. And I guess now would probably be a good time to talk a little bit about Parkinson's, because some of you might not actually know what Parkinson's is. So to be honest, I didn't know anything about it before I had it, other than the fact that it was something Michael J. Fox and Muhammad Ali and most people's kind of grandparents got at some point. And being neither a boxer, time-traveling actor or an octogenarian, I thought I was probably fairly safe in my ignorance of it. But the large amount of Googling I did between being told that I might have it and knowing that I'd got it was that it was a really complex neurological condition with no cure. And no cure is two little words, but they carry a lot of weight. It's kind of a big thing to be diagnosed with at 29. It felt like a lot. Most people, when they think of Parkinson's, will think of the tremor. So what I'm experiencing at the moment, the shakes. And that's the classic image of Parkinson's. But actually only 70% of people with Parkinson's have a shake. And there's actually over 65 symptoms. And they range from everything from movement problems like rigidity and muscle spasms, all the way through to non-movement symptoms like apathy, poor temperature control and insomnia, which are all things that have hit me at various points in meetings before. And because of the huge range of different symptoms, there isn't actually such a thing as typical Parkinson's. If you lined up, say, 10, 15, 20 people with Parkinson's, every person would show a very different set of symptoms. It's essentially like a really rubbish lucky dip where every prize you instantly want to give back as soon as you pick it out. But as well as every person's Parkinson's being different, each day or each hour, or sometimes even each minute can be different just for myself. So I can walk into a room hunched over, legs all twisted and arms shaking, and someone you probably wouldn't even notice in the room. I can go from that to a confident, quite serene looking speaker on the stage within minutes, just depending on whether my medication kicks in and does its thing. So you're currently getting post-lunch Emma, and she can do things that pre-lunch Emma actually can't, like string a fairly coherent sentence together, for instance. But depending on the time of day, whether my medication works successfully, I really have to pick when I do my meetings, because actually it can mean that I make myself clear, that I'm understandable, or that I'm not. And up until this particular VC meeting, we've met with and converted a couple of angels into investors. And these meetings they felt very different. They were clearly buying into us as founders at this early stage. And obviously, being the charming, enigmatic trio we are, once we were in Zoom calls with them, it was fairly likely we'd get a yes. And it felt like individuals saw us sort of human, and they raised us theirs in response. A really lovely, sort of very on-brand transaction. And that's one of the things that Parkinson's has brought me that really shines out as a positive. I found that the connections I make with people in my personal life, but also in business, are stronger, and they sort of happen much faster. And people in very senior positions will sit on floors to see my face so they can talk to me. And they bring their whole selves to our conversation and show their own flaws and weaknesses, because mine are on the outside. I can't hide them. I don't really have the luxury of being able to pretend I'm something I'm not. And it's led to me having a very diverse but very powerful network around me, which is something I'm really proud of. The difficulty with both unconscious and conscious bias is it often doesn't make itself very well known. So when I'm contacting VCs cold, I don't actually know whether a male founder reaching out to them in the same way would get a reply, because we're not getting that feedback loop if we're just being ignored, if we're not getting a response. So, but based on statistics, it would seem that probably a few of them would have made a judgment based on who I am, that our business isn't right for them. And I don't really understand why that's true, because women are proven problem solvers. We're multitaskers. We don't get distracted. We're more likely to be driven when we're up against men. We have persuasive powers that go beyond just sexual attraction. We're empathetic. And I'm not saying that men don't have some of those qualities as well, but we have them too. And we make really great founders. And on top of that, my disability gives me an inbuilt ability to solve any challenge that's put in front of me, because I quite frankly do it every day in life. And I really feel that diverse founder teams have superpowers that shouldn't be overlooked. So I'd love to share some learnings I've taken away from my most successful moments as a female, differently abled, pink-haired founder during our fundraising efforts to date. So number one is be memorable. I kind of really worried about fitting the founder mold when I first, started doing it. And there seems to be like a sea of people that were all trying to fit with the sort of Silicon Valley image of foundership. And I realized that actually, if I was just myself, I'd stand out a lot more. And I think investors should look for this, because actually they'll be the one who thinks differently, and thinking differently is the key to disruption and ultimately success. So I think actually, do you really want someone to be kind of following the crowd? Surely you want someone who thinks differently. Number two is be open. Lockdown has forced a lot of us to open our home lives to our colleagues and fellow meeting attendees, kids running around in the background and things like this. And this shifts the investor-founder dynamic more into the space where it's closer to being a comfortable, slightly non-intimidating setting for the founder, which is great. I've really loved that. And I'll be completely honest, I'm not sure whether I would have managed to be a founder in the early stage of a business if it hadn't been for lockdown. I think if I'd had to do everything in person, I would have really struggled. It's actually been a bit of a godsend for me in that sense. It's allowed me to kind of turn my camera off if I'm tired and actually just continue the meeting. Or I've had some founder investor meetings where I'm on the floor because I've got really bad foot cramp. And it's a real kind of litmus test of who's going to be the right person for our business, because actually if they understand what I'm going through, they understand they're going to be they're going to push us, but they're going to also be the kind of humans we want on board to grow our company. And I think actually, ultimately, deep down, I think even though people want growth and they want to see kind of traction and things like that, they want to support companies run by humans, not robots. So actually choose the people that are kind of real. And my third point is be authentic. So if you're excited, say you're excited. If you're nervous, say you're excited. It's okay to show weaknesses. It helps people know how to respond to you and what weighting or skew to put on what you're saying. And I think if investors let their human respect your human for sharing something with you, it sort of forms a bond of trust. And what more important dynamic is there than trust between the investor and founder? So I just want to summarize quickly. I think be more human. I'm going to say that because it's on brand, but I really think the right investors who are a match to who you are and what you want to achieve for your business will find you, and they won't pass you by if or you'll find them if they're right for you. And I think investors should really take the time to get to know the founders, because if you love them as people, chances are the partners and clients and talent that come their way will also love them too, which I think is a really valuable thing in business. So I'd love to take any questions anyone has. This is time.
Brilliant. Thank you so much, Emma. That was really inspiring. We've got our first question through from Drew. What do you wish someone had told you at the beginning of your career?
Not to stress so much about things. I think I very much kind of thought I had to have like a particular career in a particular order, and that actually it's okay to have sort of like a portfolio career, that actually that would be fun and that it wouldn't be kind of frowned upon. I very much kind of worried about how long I was doing jobs for and how long I was staying in things, and I worried about the fact that I didn't take a very sort of linear path. I was kind of scattergunning, doing whatever I wanted to do, and I sort of wish someone had told me that that was okay, and that actually just to enjoy it more, because I often fretted about it a little bit. But I think yeah, I think probably at the start of my founder journey, again, just relax. There's certain things you can't control, and actually just enjoy it, because you'll never be in that position again. It's such a rare experience. So I think, yeah, just relax a bit more in general.
Yeah, that's great advice. Thank you. A comment rather than a question from Jimmy. Accessibility should never be seen as a limiting factor. Couldn't agree more that diverse experiences are crucial for creating innovative and progressive businesses.
Yeah, good point. Yeah, definitely.
Yeah. Yeah. So just coming from me then on your fundraising journey so far.
Yeah.
And taking into account everything you've said, what would be one or two of the key takeaways that you would share with others who are perhaps thinking about that journey but are not yet embarking down the road?
I think the last speaker, I can't remember the lady's name, sorry, that's terrible. But she made a really good point about the fact that actually investment might not be for everyone. And I think we've really sort of thought long and hard, because actually there's so much of our business we want to keep a certain way that we kind of are quite concerned that if we try and, if we join with someone, a VC that wants us to really hyper scale, we want to be big, we want to be successful, but actually we want to do it in the right way, and we don't want to lose what's us about us kind of thing. Our brand is really important. And I think actually sitting and making that decision and deciding whether you actually need to, we've kind of fundraised the minimal we could go for. We've got grants and things like that as well. And I think if you try to not do it, I think a lot of time it's kind of encouraged to go for the big money kind of early on. It's a point of sort of honor to go, oh, I've got a £1.5 million investment kind of really early on, but you lose so much of your business. And I think you've got to make a decision that's right for you. So that's right for some people, but actually for us it wasn't right. So
yep. Okay, brilliant. Anyone else have any questions for Emma? Please put them in the chat. How do you manage feelings of doubt when overcoming hurdles in your business?
I'm always the quite gung-ho one. So I'm normally, they call me the kind of forward party. I tend to be the one that kind of, if I have any doubt, I'll just kind of do things until I know whether it's the right thing to do or not. And I know that's quite difficult for my co-founders. I've never had co-founders before. I've always been a bit of a lone wolf. So actually having to kind of take people along for the journey with me has been really difficult. Yep. So actually making sure that you, yeah, I think that's probably the biggest thing, is actually just, I tend to just go with it, just do something. I think inactivity is often quite difficult for me. So I find if I just do something, anything, until I know what's happening, then I often feel better about it, like I'm actually in control. Yeah.
And as your selection of polls at the beginning showed us, you've teamed up with two other people. So you've got I can't remember, Mel and
Duncan. Yeah.
Duncan. Yeah. And it was really interesting to see, how many people picked the right ones or didn't pick the right ones. Yeah. And, what did we have, how did we know? We simply had three faces and a selection of things. So yeah, everyone has their own superpower.
Yeah.
And it's just a matter of finding out what that is.
Yeah, I think we work together really well, because we actually we're very, very different. We've got very different skill sets, but we're kind of quite compact as a group. We actually have a lot of the things that we need that people often have to outsource. We've got a lot of those skills in-house, which is great.
Yeah, brilliant. And then Farouk is asking, what's been the best and worst experience during your fundraising journey?
Best experience was probably the fact that I was supposed to go to a angel networking event, and sounds like a bad reason, but the ceiling was leaking in my bathroom and I wasn't able to attend. And one of the angel investors actually reached out to me personally and said, I really was excited to meet you. And actually she invested on a conversation on Zoom, and then basically she's encouraged 3 other people to invest in us.
Wow.
And so that was quite, she basically just was investing in, I think, in the fact that she liked the sound of me, thought I sounded good, and, you know, just went with it. But I don't think she actually knows 100% what we do. Every time I talk to her about it, it's changing at the moment. But I think she's really excited about the potential of what we've got, sort of thing. And then the worst one was actually, I went into a Zoom meeting with a guy from a VC, and the minute he kind of came in, he said, oh, what have you done to your neck? And I've got problems with my neck, and it's really obvious that I've got problems with my neck, and I wear a neck brace, but actually just the way that he said it just really threw me off and made me feel quite vulnerable. And I kind of had to almost hand the meeting over to Duncan and let him carry it on, because actually I just felt very sort of, I felt kind of attacked by the way he said it. And it was quite a personal question. And I'm aware that it needs to be addressed and people might want to talk about it, but just the way he said it just really threw me off.
Yes, and unfortunately that happens quite a lot in those kind of meetings. I've heard dreadful stories of you know, similar type things where, I mean incredibly insensitive, and it demonstrates that they haven't done any research. Yeah.
And the thing is, I mean, it's sort of, like I said, it's a good litmus test for us to know whether we think someone might be good for our business based on how they talk to us in that first initial meeting. We're judging them as much as they're judging us, so see whether they work for us.
Yeah. Okay. Do we have any more questions for Emma? What do you consider, this is Drew, what do you consider non-negotiable in your business?
Oh, very good question. Being people-centric. I mean, I'm hot on it. It's very much sort of, if we feel like we're making decisions that haven't been, you know, consulted with real humans, I'm really kind of on that. And we're actually all on it, to be honest. And also I really value relationships with clients and partners and things like that. So if we're talking about a client, you know, I want to make sure that we've really had a conversation with them. So it's kind of just building those relationships is really important. And I spend a lot of time building relationships and cultivating kind of relationships with people, because I think that's a really important part of business. I'm maybe quite old-fashioned in that sense. I like to kind of use more traditional methods, and I don't like to kind of cold outreach to people unless I really have to.
But when you do have to cold outreach, how do you do it?
Not well. I basically just try and be as kind of chatty as I can, but I'm very aware that it probably ends up not being read or just goes straight into the bin. So I think I'm learning over time. We're learning how to, I think the biggest thing we've learned in the last kind of 6 months is how to talk about what we're doing and how to describe it. And I think I never wanted to do like an X for Y, but actually the Squarespace for events seems to unlock it for a lot of people. So we've gone with it, but it just seems to get us from A to B a lot quicker. So we're going with it, but I don't really like things like that.
No, but it's, you know, it's interesting when you've got something that's perhaps a little different, a little bit complicated, then if you can put it in the context of a name that people recognize, it's like, yes, okay, I know what that is.
And it kind of enabled us to take almost like 8 pages out the front of our pitch deck, which is
exactly. Exactly. Yeah. And as some of our earlier speakers were saying, you know, too many pitch decks have far too many slides.
Yeah, there's a really good point made earlier about the fact that actually, you know, you try and get all that cleverness in. I think it was Spencer that said it. You try and get all that cleverness in, and you feel like you want to share it, but actually, kind of, we were showing that actually we were making our problems even more challenging than it really was. We were making, you know, our solutions seem more confusing than it really was, and actually, we weren't doing ourselves any favors. And actually, by taking out those pages and being a lot more simpler with our language, it's actually really helped us.
Yeah, absolutely. Wonderful. Maxine's a comment, relationship building is an essential business skill. Yeah, absolutely.
Yeah.
Couldn't agree more. Okay, wonderful. So what I'd like to do is just draw together keynotes that I've taken out of today. Thank you very much, Emma, for an outstanding presentation, and it's been great having you on board. So I've scribbled down a few bits and pieces that I took away from each of the presentations that we had over the day, and then I've got a couple of points to talk about on the closing. So one of the things that I really found interesting, and I enjoyed the fact that we had 2 investors to open up the discussion, so we were getting a very different perspective, one from Dama here in London, one from Spencer and his perspective in Silicon Valley. And you know, it was interesting to see the kind of compare and contrast. But what I loved about both of them was that they said, particularly in the early stages, it's all about the entrepreneur. And This is something that I've found, and this is something that I always advise clients on as well, especially in the early stage, where really what the investor is investing in is belief in you as the entrepreneur, belief in your team, belief in your ability as human beings to attach to deal with what the challenges are that you face. And so, you know, more human, as Emma's company is called. I mean, that's what it's all about. It's that human angle. And the number of times I see people prepare pitch decks and they don't even have a slide in there about the team, or it's in the appendix or something like that. And what I often advise clients is that actually the team should be the second or third slide in your deck, because really, and we heard it today from Spencer and Dama, that's what the entrepreneurs are investing in, especially in the early days, you know. And Spencer talked about their early investment in Zoom. And by the way, his fund invested in Zoom at 11 cents a share. They're now trading at $285 a share. So they've done quite well out of that one. But, you know, he talked about the founder of Zoom and said, you know, we know the product's not quite right here, but we trust this person. We believe in this person, and we know that they'll find the way. And I just really want to stress that anyone who's out there thinking about it, make sure you pick up about yourself, about your team, and, you know, don't be shy. Don't be overly British and think, oh no, we mustn't talk about ourselves. A couple of other things that I really liked from what Spencer was talking about, where he talked about the clarity of the vision, and he gave the example of Tesla, and he said, you know, and this is true if anyone's studied Elon Musk. Elon Musk always knew that Tesla would really take off when they could sell millions and millions of mid-priced sedans. But they also knew that in order to do that, they had to start by building the Roadster and finding the fanatics who were willing to pay, you know, 150 grand to buy this electric Roadster. They knew it wasn't going to be a mass market, but they had so many of the core production things that they had to sort out, and they did that effectively through the funding from what they sold on the Roadster. They then said, okay, the Roadster has proven those core things. Let's now look at building an expensive car, which was the Model S and the Model X, and try and bring that to a wider community. And then what I thought was Musk's absolute masterstroke was when he launched the Model 3, he did a great big show, much like Steve Jobs used to do at Apple. He did a great big show and presented the Model 3 and then said, it's not going to be built for another year, but if you'd like to put down a $3,000 deposit, you will get one of the first ones as they roll off the production line. More than 100,000 people put down a $3,000 deposit, which gave him all the money he needed to go out and build the factories and build the Model 3. And it is today widely recognized as one of the most successful electric cars on the market. And Tesla is one of the most valuable companies out there. I'm not sure if it is anymore, but there was a point in time, I think earlier this year, when Tesla was worth more than all of the other major car companies in the world combined. So I think, you know, that clarity over the vision and knowing where you're going, and then using that story to work backwards as Spencer presented it, I thought was great. The other key thing from Spencer, two more from Spencer. He talked about keep your deal structure clean. And I can't stress this enough. So many entrepreneurs I see get into different classes of shares and different structures of things. And, you know, I've seen people going out, and I was talking to one prospective client recently, and it was still the three founders, and they had 6 classes of shares. And it was just, it confuses everything. It makes it harder to achieve anything. And when you get in, without going into the details of the law, but when you're having to make major decision and you have multiple classes of shares, each class of shares has to vote in favor of it, or the decision sometimes won't go through. So just keep your structure as clean as you possibly can. And then the last thing Spencer talked about, which links back to what I was saying in my opening address and links a little bit to what Emma was saying, is you need to catch someone's attention. So Spencer talked about the fact that in the last year, they had 500 pitch decks. They actually saw somewhere between 50 and 75%. 50 and 75 companies. So they actually met with 10 to 15%, and they made 12 investments. So that's 2.4% of the total number of things that the pitch decks that they had. As I said in my opening remarks, I was talking to the senior partner of a mid-sized London VC a couple of weeks ago, and in the last 12 months, they had received over 1,000 decks and they made 16 investments. It's a numbers game. It's hard work, but you got to stick with it. And you got to know that you're going to get a lot of rejections. And you're going to get a lot of cases where not even you don't get a rejection, you just don't even get a reply. And, you know, you might say, oh, that's rude, that's terrible, whatever. It is what it is. You just have to understand that. So when you're out there looking for money, don't let that drag you down. It's a tough numbers game. There is a wall of money, but there are a load of people going after it. Geeta picked up on one of my favorite points that I've also touched on in the discussions with Laura, where she said, you know, you just need money to grow sometimes. And it's true. Really fast growth absolutely sucks in cash. Geeta also had one of my favorite lines of the day where she said, the kids are still alive, which I thought was great. And it was a very entertaining and interesting and high-paced talk that Geeta gave us. And then Zareen, when she was talking about the huge support of her customers and addressing the mindset of discrimination. And again, I think, you know, that's something that this is what we're all about at Funding Focus is addressing that uneven playing field. And what is the mindset that's behind it? And what can we do to pick that up? And again, I'll refer to what I was talking about in my opening remarks from the research that Dana Kaunza did, Dana from London Business School, who did her PhD at Columbia, and the issue of promotional questions versus preventive questions. And no matter what question you're asked, if you can respond in a promotional way, you will be much, much more likely to succeed in your investment. And then we had Laura talking about the kind of the other way around of doing the journey. So many angels start life as successful entrepreneurs, but Laura started life as an angel and went round. But I loved her tips, you know, ask for help. And it's interesting, you know, when we're little kids, we don't think about asking for help, but somehow, somewhere in our conditioning as we grow up, we start to think, oh, it's not good to ask for help. And we couldn't be more wrong. We couldn't be more wrong. And, you know, as Laura said, lose the fear, and the benefit of asking for help comes back much, much more than you could ever possibly imagine. And I see Emma nodding her head there. And yeah, absolutely. Don't be afraid to ask for help. I love Laura's comment about slow and steady versus exponential growth. And that was where I was talking about how growth devours cash. But it's really interesting because when you're in a VC funded scenario, you'll often find yourself under huge pressure to be going after that exponential growth, which leads quite nicely into the last of Laura's points, which is that not all businesses are investable. And I don't 100% agree with that sentiment, but I do agree that not all businesses are attractive to venture capitalists. And that's something that I'm working on with my team to try and figure out how can we find an alternative to that. And then Emma, you know, loved that she said wasn't really set up to be an entrepreneur. I wrote JFDI, just fucking do it. And again, she talked about the lack of the feedback loop. And again, it's the same thing. It's, you know, it's the 1,000 pitch decks leading to 16 investments, or it's the 500 pitch decks leading to 12 investments. And whether you think it's rude or not that they don't get back to you, it happens. It's kind of like the sale process. You know, you get a lot of no's or non-responses. Embrace the ones that come back to you and say no. and learn from them. And one of the things that I do with clients is whenever I get a response from anyone saying, I've looked at your deck, thanks so much, but it's not really what we're interested in. The first thing I do is I email them back. I thank them for coming back to me. And I ask them, is there anyone else they think I should talk to? And the number of times I've been given a lead that's led to a successful funding round. So absolutely don't hesitate to reach out when you do get those responses, and thank them for taking the time. And finally, Emma's point about women make great founders. I didn't talk about it earlier on, but I have talked about it many times before. There was a great piece of research conducted by Boston Consulting Group. I think it was in 2017. And they looked at over 500 companies that had been through one of the accelerator programs and had successfully raised funding. And they found that female-led firms generated 2.5 times as much revenue per dollar invested as male-led firms. 2.5 times as much. So, there's a huge compelling set of economics behind this. So that's kind of my recap of the day. I have two other things that I want to tell you about. The first one is, as I mentioned in my opening address, so we've run our Explore Introduction to Finance and Fundraising course. And our third cohort of that will be kicking off in January. We're going to be running a webinar that will tell you all about that on the 15th of December. So if you're interested in that, please just put webinar into the chat and we'll reach out to you and give you more details on that. And finally, I'd like to say to everyone, and this is really, really exciting news. Save the date, please open your diaries now and save the date, Thursday, the 10th of March, 2020. We are going to be back live at the London Stock Exchange. I've been liaising with contacts there. We were trying to run this event live, but with all of the COP26 things going on and the normal reporting season and stuff, the stock exchange just didn't have the ability and space to fit us in. But I was talking to a new person at the stock exchange, and she said, oh, this sounds really great. They've changed some of the rules, so I have to put this up the chain of command. It went all the way to the stock exchange's head of diversity and inclusion, who absolutely loved what we are doing and has invited us. So next year, in the week from the 7th to 11th of March, that's the week that includes International Women's Day, and the London Stock Exchange is putting on 5 days of events, and we have been given a half day to bring Funding Focus back live at the London Stock Exchange. So please put the date in your diary now, Thursday, the 10th of March. It'll be an afternoon event just like today's. It'll be live in person if you're in London, and it will be streamed around the world through various technologies. We've got to work with them. The stock exchange has their own proprietary technology, but it's only a one-way system, so we can't get messages back. So we're looking into how we manage that. But really, really excited to be back there. And I will now open the floor to anyone who would like to ask anything or raise a point. Jimmy had to zip off. That's great. Several people saying webinars. Olivia, woohoo. Yes, Olivia, you were there at the first one, so it'll be great to have you back. So please, folks, the floor is open. Feel free to either unmute yourself and ask a question or put it in the chat.
Hi, David. Sarah here.
Hi, Sarah. Nice to see you.
That was such a brilliant session this afternoon. Thank you so much. I really, really enjoyed it. I'm going to ask a question now. I think I know what the answer is, but I'm going to ask it anyway. Is there a quick fix here, or is it just a slog to get the funding? So is there anything that you can do to speed things up in your mind?
I don't think there's a quick fix because we're dealing with structural and societal problems. But as you know, I've committed that I'm going to do everything I can to address them. It's going to take time. I am working on a few other quite big things. I'm not at liberty to share the details of them yet, but kind of trust me and watch this space. But no, I don't think there's a quick fix, because, as I say, these are structural and societal issues that need to be addressed and changed. And, you know, all you have to do is look back 115 years to the beginning of the suffragette movement, and how long did it take before there was universal suffrage? You know, I mean, I think in the UK it was 15 years before the first women were allowed to vote, but they were only allowed to vote if they owned land. You know, and then it was another 5 or 6 years before it was opened universally. And like I for those of you who know my background, I lived in Switzerland for 6 years, from the mid 80s until the early 90s. And there were 2 cantons in Switzerland that had only allowed women to vote in the last 10 years. So it's, you know, it's shocking to see how backwards some of those things are, and those things will take time. So sadly, no. What I would say, and it's been touched on by a couple of our guests today, is do look at alternative sources of funding, do look at grants. Once you've got a business that's starting to generate revenue, there's a growing number of people who will lend you money against your future revenue stream. So you're not having to sell any equity in the company. I've not looked at them in detail, so I don't know what the terms are. Also, I would say for anyone who's in the UK, and this is a UK scheme, the recovery loan scheme the Chancellor has recently announced that that's been extended until the 31st of March. There are a few slight changes to the terms and conditions on that, but basically it's a loan scheme that will help businesses that have been affected by COVID. So you could say, look, I launched my business, and then all of a sudden COVID hit and this has happened. I need to borrow some money to make the investments. And what happens then is you'll go through the investment process, or the lending process, but the lender will get, if you get your RLS loan before the end of December, the lender will get an 80% guarantee from the government. I believe that from the 1st of January until the end of March, that's going to drop to 70%. So I would definitely look into that. If you just Google recovery loan scheme, you'll be able to pick that up. And you know, you can go to, I mean, there are mainstream banks do it. Funding Circle does it. If you want to move faster and don't mind paying a little more interest, Funding Circle is probably the best route. I've done a number of Funding Circle RLS loans and previously CBILS loans last year for clients. And you know, once you've got all your kind of ducks lined up in terms of information, from submitting your application to having money in the bank takes less than 2 weeks with Funding Circle. Okay. So I would definitely look at that.
Thank you, David.
Pleasure. Gabby is asking, where is the best place to find out more about grants? Gabby, can you just put in the chat where you're located, what country you're in? UK, brilliant. So the first place to start is Innovate UK, which is the main UK government grant thing. The other thing you can do is go onto the gov.uk website and type in grants, and it will take you either to Innovate UK or to a list of other grants that are there. The next thing to look at in terms of grants is where geographically in the country you are. So if you're in one of the areas that is perhaps less well economically developed, you know, so let's say in the northeast or in the valleys in Wales or in the islands of Scotland, Liverpool seems not to have much. I would have thought there'll be something for the northwest, Gabby, but I would definitely start with Innovate UK and go onto the gov.uk site, and you could also have a look. There are often regional grant advisory agencies. Again, I don't know what the quality of them is, but you can often tap into that through a local chamber of commerce or something like that. Anyone else? Feel free to unmute or drop a question in the chat.
David, I'd just like to say...
Hey, Farouk. Nice to see you.
Hi, how are you, David? Thank you.
Very well.
I want to say what a fantastic range of panelists you've had today, speakers you've had today. Inspirational, educational, informative. I loved Emma's presentation because I dream of meeting founders like that are very clear, are very kind of expressive. And I think I've just asked her, I've just requested her deck to look at, because I'm
brilliant.
just in the process of forming my first fund. And I'd just like to share my experience from going from an angel into a fund scenario, is that I reached out to probably over 100 VCs through LinkedIn. Probably 75% of them were women, 25% men. And I just asked them a simple question. I'm in the process of forming my fund. I'd just like to share my fund thesis and my portfolio construction. Can I do this? Would you be open to a call, a discussion, or give me some feedback on where I am? I got a 3% response.
Wow.
Yeah. And it was scary, because when I said 75% women, I would have thought I would get at least 15, 20%. Yes, let's talk. I'm very happy to give you feedback. And then my thoughts turned to, well, why would I not get a response? Because every founder says, well, why didn't they reply? Why doesn't anybody think this is worthwhile? And my only conclusion was that, am I seen as a competitor? Am I going to be seen as a threat? Therefore, they don't want to share stuff with me, which to me seemed kind of logical. I don't have an answer. And my advice to a lot of entrepreneurs today is that this is a grueling process. I'm undergoing it from an investor's perspective. From a founder's perspective, it's even harder. And like you say, there is no quick fixes. Like Sarah was saying, there is no quick fix. And this fund is purely aimed at women and minority founders. So I'm thinking, there's a very definite slant to this. 75 VC women who I asked for help didn't come forth. So there isn't even help coming from the gender that I'm targeting the fund to. So I'm thinking, well, what's wrong with this picture? What's wrong with sharing information or helping me to set up something that's going to be very, very directed towards women and minority founders? So it's being disheartening at times, but I think, as somebody said today, entrepreneurs have to turn up every day. That's the rule of this game. It's tough, it's brutal, and it's made me more determined to say, I think Emma's story today was brilliant. She didn't turn up to this angel meeting, but somebody called her up and said, I was looking forward to meeting you, has invested in her and doesn't even understand Emma's business. And you got to say, God bless those investors, because that's all heart, all conviction. And a lot of investment is sometimes it's purely conviction. You really don't understand the nuts and bolts of the business. It doesn't matter. I think you need investors who say, I believe in you and I believe in your team, and I think we'll get there. And any way I can help, that's what I'm going for. Anyway, thanks very much for a really entertaining and informative afternoon.
My pleasure. Great to see you again.
Thank you.
Okay, anyone else? We've got 6 more minutes. Okay, Emma's and Gabby have reconnected on that, so that's good. Would anyone else like to unmute or put a question into the chat?
Yay, hello.
Hi.
It's me.
Wonderful to see you, Olivia.
I know. I can't wait to get back in person. That's going to be
so
That's 2 years ago, because it was pre-pandemic, that event at the stock exchange, and it seems like such a long time ago, doesn't it?
Yeah.
But no, I can't wait. So I was able to jump on from 4 because I had other stuff booked into my diary earlier on. But one of the things that somebody, I think Laura mentioned, that rejection piece about that sort of. And I think for people who don't know me, I'm a therapist. So I do a lot of work with anxiety, performance anxiety. And I also do quite a lot of work with entrepreneurship and mental health, that kind of mindset. I've been guest lecturing most recently at Bayes Business School about the dark side of entrepreneurship, the mental health side of it. And one of the things that I've noticed is that where, I don't know, that case I mentioned to you a little while ago, Oh, by the way, I'm wearing Cindy Gallup's lipstick.
Lipstick, excellent,
My
excellent.
new lipstick has come out. Our mutual buddy, Cindy Gallup.
Bossy bitch.
This exactly. So this huge frustration of like watching these very, very unsuitable companies get funding, like those two tech bros who just got money thrown at them. They weren't even raising. They got millions thrown at them because they were two like white sort of tech bros who had a diversity thing. And then there's other people, like, you know, friends of mine, people I know, clients who are struggling. They are exactly, I think, what Emma was referring to about that sort of that sort of bias that people have. And often it is not even unconscious, often it is conscious bias. You know, I know like Asian people who are like, you know, Stanford, they've got the tech. I'll probably introduce you when we're offline. They've got this amazing like anti-harassment app, and they are struggling to get funding. You know, they are really, and for them, the mindset of watching, like you were talking about earlier on about the systemic problems, they are watching all these other people get millions and billions thrown at them, these insane valuations, and there they are, and they have a genuine product, they have a genuine, you know, startup where there's a need, and they are struggling, and for them, like, so I help them to try and get their heads around it and to keep going, because it can be so hard to get, so difficult to like get, you know, you can get so disheartened, I think, where you
can, yeah.
And I think people do sometimes go into like a freeze trauma response. So, and I have such an admiration for founders because I know what they go through, and I know that I think they are a special breed. And I think that the kind of the frustration and the mental health pitfalls of it as well. I think I was talking to somebody earlier on about some of these founders, like the WeWork guy.
Yeah.
Like 47 billion valuation. It was getting insane. SoftBank were throwing billions at him. Yeah. And it's just like this idea of like, they start to believe their own hype.
Yeah.
And there is this whole thing of other people looking at that thinking, what am I doing? What am I doing wrong? I can't win here. So I'm, you know, as you can tell, I'm really interested in that. And I'm, you know, fascinated by the psychology of all this, because we do, as humans, we read the room and we see what works and what doesn't work. And then, of course, I think that the problem with the Theranos case that's happening now, I actually featured her in my lecture at Bayes Business School a couple of weeks ago, of like, once again, there's this cult of the founder of like the crazy dropout that disrupts an industry and that won't take no for an answer and throws people into a room and says, make it happen. Well, Steve Jobs did that, but it's okay to like release a buggy iPhone, but it isn't okay to like have a diagnostic equipment that doesn't work. And the thing about Theranos is like how long it went on. It's mind-blowing. And of course the court case is happening right now, so it's fast for those founders that have the vision. And of course you have to be optimistic for them, but also so for them to have their feet on the ground a bit still. So you have to have that slightly grandiosity optimism, but also you need to keep your feet on the ground. So that balance is fascinating. And so I'm so happy to be here. And I'm delighted that we'll be back in person, in that lovely room. So yeah,
exactly.
Delighted.
Exactly. Wonderful. Very good. So Maxine, thank you. It was a morning well spent connecting from California. So it was a 6 a.m. start. Very well done. Thank you, Maxine, for joining us. She's an executive and business coach trained by Cambridge University. Very good. So there we are. And Olivia, you should probably put your contact in the chat, just because there may be some entrepreneurs who would be interested in reaching out. And
absolutely, I will do. Yes,
having a chat with you, because you
have sorry, I need the confidence issues is my thing, basically.
Terrific. All right, well, we're at the top of the hour. I'm happy to carry on if anybody still wants to have any conversations, but I respect that some people may need to make a move. We're still 17 people, which is great. So if anybody wants to unmute or thanks very much, David and team. Thank you, Antoinette. I'm glad you enjoyed it. I'm glad you found it enlightening. Does anyone else want to either unmute or pop a question into the chat?
Hi, David. This is Reina DeCosta from
Hi,
Biz Law
Reina.
UK.
Yes.
I'm an entrepreneur and founder, and we provide holistic legal services, which includes helping connect our owner-managed businesses with funding options. So I really enjoyed today's event, and I'm looking forward to the live one as well.
Excellent.
It was lovely listening to all the inspirational speakers, as well as connecting, with the one-to-ones with people like Olivia, etc.
Yeah.
So well done for what you're doing.
Thank you very much.
There's another network as well that supports women founders, and I've attended a couple of their events, and it's mostly tech related. So for our founders who are not tech companies, we have like a link on our website to help them with startup funding, which is more like debt funding, etc. If they can't get equity funding.
Yep, absolutely. Oh, and just coming back to who was it asking about? It was Gabby. So Gabby, is Gabby still on? Yes, Gabby, you're still on. So Gabby, one of the other things, I don't know how old your business is, but there is a thing that is run through the British Business Bank. It's called startuploans.co.uk is a website.
Okay.
And they will lend up to £25,000 to founders of businesses as long as the business is less than 2 years old. So
Okay,
I would also
great.
I would also say go onto that. I'll put it into the chat so everyone's got it.
That would be great. Yeah, I'm just past a year, so that would be ideal. Thank you.
And yeah, because so that should all be one word, startup. For some reason, but startuploans.co.uk, and it's from memory, it's 25 grand and 6% interest, which is pretty attractive. It is a personal loan to the founder to then invest in the business. But if you go onto the website, you can learn more about that.
Thank you, David. That's really helpful. Thank you.
Tell us about your business since you're on.
Oh gosh. So my business is Talk 20s. We're an organization that supports and bridges the gap between full-time education and the big wide world of adult life. So all those life skills that you don't get taught in school. So I'm a former teacher and left the teaching profession to kind of make this happen. And essentially what we do is we have an award-winning podcast, but we also do online courses, webinars, and now in-person events. Now COVID is kind of hopefully in the rearview mirror. Just recently left I used to work in events full time, but just recently left that to focus on the business. There's so many different elements. So just recently left that a few months ago to kind of focus on the business full time. And at the moment, like I can see where I want to go with it, but everything we've done so far is organic in terms of growth, in terms of the podcast listeners and everything. We've never put a penny into marketing or anything like that. And there are 9 million 20-somethings in the UK that we could potentially support. And we just want to get access and be able to let them know what we do and be able to provide support to them. So yeah, I think we're just looking initially sorry, you can probably hear my dog running around.
Fine.
We're just looking for initial kind of capital to see us through, and then hopefully investment in the near future as well.
Okay.
So yeah.
Cool. Then I would say definitely check out the startup loans, because that's that's just direct to the source.
Thank you. That's really great. Cheers.
My pleasure. Okay. Anyone else? Any questions?
I have to shoot off, but I want to say thank you for a really great event. I really enjoyed it. It's been fantastic.
Brilliant. Thank you, Emma. It's been great having you, and we'll keep in touch.
Thank you. Nice to meet you all. Bye.
Take care. Anyone else? Otherwise, I will say we can draw today's event to a close. So as T does it, I'll do it as a countdown, but I'll give you 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Thank you, everyone, and we will see you at our next event.